What I could do, maybe I could do it like another way. Good morning. Good morning. Can we please get some good price action? We got a little bit of catching up to do. We'll get there. We'll get there. I think we will anyways. Guess we'll find out pretty soon. So, got a lot of questions about price action via the Discord. I have a lot. I got so much I could want to say about it right now, but it's kind of slow roll it this morning. I'm more curious to see if this is an adequate bounce or if this is just some kind of whatever. The one thing that bothers me about this move right now, and I guess we just got it, was there was a lack of any kind of a check on 450, and there really wasn't a lot of support on 450. Now, I'm not like a huge proponent that 450 needs to be checked like all over the place, you know, like it's not that big of a deal to me. I never really felt like 450 was a big number. We'd found 460 and 440 seem far more important to our operator than 450, but nevertheless, 450 has been, you know, at times like right here, you can see like that 449, 450 area definitely has been, you know, important in the grand scheme of things. I thought it was kind of odd that when we came down, there was no reaction here off 450. So we'll address that maybe this morning because it looks like it's going back up to check it. Unfortunately, we kind of lost really like every trend that we have going down except for maybe the steepest trends. So that's kind of a big bummer sort of moment. There may be some kind of a, I don't want to say hope, but no. You guys are like, thanks, Buxy. What a heck of a way to start the stream. I was gonna say there may be hope in the parallel, but it's actually the same. So yeah, so basically this looks like a flag that basically broke down. And we need to get back above the 450 area to really recover it. We could do that with greater strength, but it's odd to me because we came pretty low, you know. And I don't know if you guys recall, but maybe a couple weeks ago or whatever it was back here, we had looked at where would you go if you didn't hold 460s, right? And at the time, we had, for GME, also been looking at potentially going down to this pocket, right? If this had reacted and then came back down, we were saying that, like, well, it could come back down and go back down to this pocket here. Those are levels that weren't guaranteed because it's essentially like a spring. And the difference between what AMC is doing and what GME is doing are very, very clear right now. So I had said don't put too much emphasis on the difference between AMC and GME. You know what I mean? I said, hey, don't put too much emphasis on the difference between the two because GME's got a lot farther to go before it can get back to its middle, and it'd have to come down farther to get to a spring, so on and so forth. But they have deviated. Like at this point, it's difficult for me personally to look at this and think that GME is going to come back down and make a spring. I'm not saying it's impossible. And I want to point out that there is a possibility that there's some kind of crazy drop here, as weird as that might seem, because you're like, well, I don't see how that's possible. You know, there's no logical reason for that to happen, maybe, is what you might be thinking. But this is the build out, right? You've got this kind of climb up to this creek, and then it drops back down, climb up to the creek, and then it drops back down. And in this case, when it dropped back down, it made a higher low, and it did it over here as well, higher low. It's about to hit that creek again. So I suppose like my biggest concern, I guess if you want to say biggest concern at the moment, is they are not quite in sync. And why would that matter? Well, it would matter if you're of the opinion that they're going to kind of move in tandem. What would happen if, and I know that they've, again, distance-wise, GME's traveled farther, but it has made similar moves. Like they both pushed off their liquid center, you know, back here in early September, even though GME made a much more dramatic move, like they start from the same place. So they both had achieved the same kind of wraparound goal here and push down. It's interesting, right? Because they're definitely different stocks and they have different prices, but they happen to be in very similar areas. So then the question right now for me is like, well, if this iterates again, you know, what we maybe would expect would be for it to come back down and try to go for a low. And then if it doesn't succeed, it's essentially like an LPS. It could be pretty high up here. We don't really have to know every little detail. I know that at this point, my charts are looking pretty darn messy on GME. So I probably have to do a chart cleanup because it's getting a little ridiculous. I know. But my point being is that you couldn't look at this and sort of estimate, hey, GME is going to bump its head on this creek again for the, you know, 1, 2, 3, 4, 5th time or whatever it is. Maybe not that many. 1, 2, 3, 4, maybe 4 times. You know, and then expect, oh, if it knocks back down, that AMC is just going to be fine. So if you were just of the mindset that like, hey, that's what's probably going to happen, it definitely begs the question, where the heck would AMC be if GME is taking a dump, if it reacts against that creek? And there's no reason it shouldn't. So there's going to be a lot of folks that are kind of like pumping this because it's had a good run up here. The same thing happened back here. It had a good run up. It advanced to that top area. It did not hold 2310. That was the level that it needed to hold. It kind of like did some weird stuff around it and then went back to check creeks and then it sat on it. And frankly, like that level I had picked out, I picked it out because it's really, really important on the big picture. And it just dumped from that. And now all we've really done is kind of retrace that gap. There's going to be a lot of folks out there that may look at this and say, hey, it's going to go. I don't think it's impossible. And I think that if you look at the big picture, you would just say, well, maybe it's just an LPS, like a last point of support. It's not going to make a spring. It's not going to drive back below that kind of August 5th bottom. Why would we say that? Well, because AMC already did. And so there's a confusing kind of disconnect right now, which is that AMC's largely been not following the crowd. It's been heading down for that low as if it needed to get that check, and it's kind of running behind. We do have a good ramp of volume here going into this break of 441. And I think that looks pretty decent, but as a spring goes, I didn't like that it closed beneath that value. I thought that was kind of a weakness. Typically for a spring, you don't want to see that on the daily. You want to see it kind of dip below, come back above. There are different trains of thought on this, which is, hey, you should trade below the range if it's a spring. It's kind of like the thought process maybe with a UTAD, which is an upthrust after distribution, which is often like trading slightly above the range, as opposed to a UT, an upthrust, which doesn't trade above the range. It just kind of pops above it and then closes beneath it on the daily. That's typical. So there's kind of a mixed I feel like it's kind of a mixed bag here. Like, I'm not really convinced that this really made a lot of sense. I liked the ramp of the volume, but I didn't really like that it didn't close back above 441. Thought that was a little bit of a weakness. Bulls couldn't even take it back up. There just wasn't a lot of response there. Volume-wise, it's fine. It was a real low volume after it broke. It could have been way worse, right? So we're going to see on the second reaction how bears respond to this kind of breakdown. But I guess what I'm trying to say is, like, I'm having a little bit of difficulty imagining what the reaction would be if GME comes up here and then rejects and starts dropping. Are they just going to be inverted for a little bit? Is AMC going to be going sideways while GME drops? Or is it just frankly going to dump? So very, very strange in terms of that disconnect. And then you can see that, like, clearly whatever I had drawn here was not right. So you're probably wondering if you're not part of that group, and it's fine. You didn't miss a lot. You might be wondering what this is all about. So I didn't say redid the chart. I just kind of adjusted it. I had pretty much the same lines on my other chart anyways. But what I did is I went back and I looked specifically at, again, basics, like where is this range at below. And then above, and then of course I had very similar lines in terms of these creeks and how they're interacting with the chart. But specifically I wanted to focus on this bigger wave here. So I did this in more of a macro view. And, in the grand scheme of things, I would call this an ear 1, ear 2. And ear 2, unfortunately, didn't break back up, which is what we normally want to see happen. It broke down. It does not necessarily mean by default that it is bearish, because it depends on whether or not it has like a latent upthrust. I don't see one here, so that's a good sign. What do you mean, right? What do you mean latent upthrust? Well, it definitely crossed down. There's no doubt about that. So this would be considered like maybe a little bit of a sign of weakness. This suggests that you're going to try to push down later. And here you definitely have that upthrust. We talked about that. And then we needed to come down to like the 470s, perhaps change character. We did form a bottom right here, which is good. We push back up, and then this would be basically like the second cat ear, okay? Now, what's good about this is that there's no upthrust here. So had there been another upthrust here that was like a fake breakout, I think it would have been sort of like this one, where you're basically like, okay, now we're gonna like really take a massive nosedive. Instead, it stayed pretty conserved, and I think that this movement down has been very tight. So I drew an arc here. This is basically where I see the creek right now. I don't see any major attempt to kind of prematurely break the creek. So I'm not seeing any kind of head fakes or anything like that, which is good. I mean, it is. So we talk about this a little bit here and there on the stream, and I'm just going to recap that one little part about it, not everything. When you get to that, just again, you never know. People come in, they don't know what I'm talking about. Basically, like when you get to that cat ear, one of two things can happen. It can kind of cross up over the creek and then advance. This is typically like the faster bullish option. Usually this involves what we would see as like an LPS or something, maybe like here or whatever, okay? And so there's an early advancement, sign of strength or something like that with a backup. It could be that, or it could be just a creek jump. It doesn't have to be like way high. But the other thing that can happen is that if you get to that secondary movement, that you don't break out. And a lot of times this is what causes, at least from what I've seen, this is what causes that second cat ear to look kind of flat. And then another important concept to understand in talking about all this stuff is that these are part of like a larger iteration. So there's still another cat ear here, right? And then of course this is like another version of kind of like the same thing, but shrinking. So one of the things that I've noted is that when we came through here, we definitely had a change of, uh, in my opinion, we had a change of character back on August 12th. And ever since then, it's been pushing like as if it could break, but it hasn't broken. And we started this new trend down, which is this new creek down. And you're basically like working out kind of like the final iteration of like this whole big wave, like big one, big two, then you got little one, little two. And when I looked at it originally, I was thinking that that was going to be like this. So you basically would have maybe a drop through here. So like, remember back here, I was talking about that low, that hit on 520 and how we could have done this and then like broken out. And I was imagining like that was going to be more like this, where you don't advance too high, this stays as a solid range, and you just get a localized dip beneath like 485 or something, and then you can just leave. That totally could have happened, didn't happen, right? The upthrust kind of gave it away when it came above 520 and then just didn't hold. And then the nature of the rest of this is just what it is, right? Had it done that upthrust and stayed low, I think it could have been just a setup for a spring here that then returned back to the top. And that would have been a healthier break. We could have pushed up here and had a healthier break over 520. And I think this is what we would be looking at in terms of like a cat ear breakout, right? So ever since about August 12th, we've had these opportunities. And every time we've had these opportunities, we've kind of just, frankly, like not done it. There's not really much else to say. Like, you got two paths ahead of you, and it keeps choosing the lower path. And as it moved along, we're looking at, all right, potential bottoms, which it may not seem like it, but I went back and looked through a lot of my screenshots this past weekend, and I was looking at, how accurate have we really been here? And it may not seem like we've been that accurate because you haven't gotten those breakouts, but really like the setups have been pretty straightforward. And every time it's chosen the alternate path, we've had that in mind. So I like to go back every now and then and just see like, am I like way off base here? Am I missing something? And the answer is no. Like, it may seem like that because it hasn't broken out, but really every time we've had these kind of fake outs, we already had the other target in mind, and that's just where it went. So it kind of stinks, but early on we had actually identified, I think it was back here. Yeah, we had identified 465 as like a potential target, and it wasn't one of those things where you're like, well, it's going to happen immediately, and it didn't. It was like weeks and weeks and weeks later. But we've kind of seen that all along because it's been the primary support here at 465 for AMC. It's been the most important support, I would say, that we've had. Outside of kind of just wrapping around the liquid centers, which is basically, I say centers because it's been slowly rising from like 485 to 5. Right now it's like 493 or something like that, right? As it's kind of moving around. And I'm looking at this right now, and I'm kind of trying to get to the point here, is that this is not like immediately bullish, right? So this looks kind of bad. And we had these targets in mind of like, well, where could it go if it goes low? And I had surmised that best as I could that you could come between 440 and 425, and it says 432 here, but between 440 and 425 would be okay. It wouldn't be the end of the world. You could potentially make a spring down there if 460s didn't hold as kind of like the first primary level. 460s is not a big picture spring, and that's really important to understand. 460s was never a macro spring. Like, this whole range is really big, right? It basically starts back here in this big push up, and the range essentially goes from like really, I mean, top to bottom here. You could make an argument that it goes from 6 down to 430, or you can make an argument and say it goes from 575 back down to, again, like 460s. The range has kind of been tightening, so it's an arguable point. But suffice to say, like, that would not be a macro spring. Like, and so someone in the Discord was kind of questioning. I think it's a good question, and it's a good question because you're like, well, if you throw the term spring around a lot, it doesn't have a lot of meaning. It makes it seem like, all right, well, every time you're talking spring, most people are thinking it's going to rocket to the top of the range. That's not necessarily the case. Like a spring in a shallow area doesn't get you all the way. So like back here, we were just talking about a minute ago in August, going into September, had this little tiny range generated a spring, it wouldn't have taken you all the way to the top. That's not the guarantee. It's the spring would have taken you back to an SOS at 520, and then you still have to break that creek. So it's not like the spring is, when I say spring, it's not like I'm talking about something on like the big picture. So here at 460, had that been the spring, it would be kind of like what happened on GME here, potentially, assuming this doesn't change direction crazy, is it didn't go for the spring, it just broke out and it just broke out. Broke out again. And then it's cooled off its jets and it's lowered, you can see the volumes dropped. That's good. It's rounding off here and the volume's dropping. It's got potential to just crank it back up again, right? And just keep going. It's potentially there. Like we talked about how the high volume could be dangerous, but it kind of rounded off as it was going up. That's good. You don't want to see it ramp up into high volume. But this starts then looking back retrospectively, you're like, well, then this is just an LPS because it's definitely not a spring. It didn't come below the bottom by any definition. So it's like they're doing different things, right? So when I look at this big picture, I'm like, yeah, I think that you could argue that easily that if it had been the same, perhaps, that we could have gotten a spring here at 463 and then headed back towards the top. And if we were in the same place that we were on GME, we would be approaching that 2310 level, which is, basically the same as like, I think 493. Yeah, basically the same as like 490, 493. And we're not doing that. So anyways, point being, when I said spring about 460, I say small early spring. I'm talking about a spring here that leads you back to the top of the range. But the top of the range in this case, had it done that at 460, I think would have been maybe at least locally you would have come up to this level right here. Because again, we didn't ever back test this. Not really. There's like a small one right here. And that's it. It doesn't ever reach back up. Hence why I was wrong about this, because I thought, well, we probably reach back up before we go back down. We didn't do that. We went the other way first. Okay. I know I'm talking all over the place. I'm trying to kind of recap. My point is that you had a potential to reach back up to this 490 area like GME did, and it did not. Instead, we went low. And so that 465 was a potential that had a potential spring zone, would not have been necessarily like a macro spring. It would have been like a macro LPS, last point of support, meaning it didn't ever come back and breach the low. So it's good to note that like just because you say spring, you have to understand like what range you're in. If you're not in like the macro picture, you're not looking at the biggest possible range available. The spring does not necessarily mean you're going to break all the way to the top, okay? I think there would have been a good chance of that had 465 held, because you should have then at that point push all the way back up to near 510 or 511 again. And that to me would have been really positive. I think you could have broken out. We would have been back to the top here, right where we need to be to kind of like break out. So was it adequate to move off of 465? I would argue, yeah, but your operator didn't want that. So where do you look? You look to the next possible drop, which again, we thought probably was between 440 and 425. And it looks like we were right. Now, I'm not particularly happy I said about that drop yesterday, the fact that it didn't hold, But I will say this, when you look at the RSI on like the 4 hour here, it looks pretty strong. I mean, this to me looks like a bottoming action with a tick and then a dip down below. If I saw this on price action, I'd probably be pretty happy, and it's very similar here on price action. But I might be pretty happy to call that like a floor, a push up, and then a dive for a spring. And then when I look at this big picture, yes, has it been more oversold? Yes, it has. Is it possible it continues to oversell and continues down? Yeah, I mean, it's possible. This thing's gotten really, really, really oversold at times, to almost a ridiculous extent. But it doesn't ultimately need to be that low in order to break out. And the proof is right there in the reaction. So when it finally did react, it actually took off from 40, not way down here at 14. So this is back in May. It was taking off at 40 on the 4-hour RSI, not the lowest point possible, which was way back here at like 15 or something, right? So is it classically oversold right now? Yes, it dipped below 30 on the 4-hour RSI. It's the lowest it's been since April on 30-minute, and I was pointing that out in the group yesterday. If you go backwards and you look at how low it got yesterday on the 30-minute, actually it got lower, I guess, as the day went on. It hasn't been this low since April 2nd. So really low. Okay. So generally I would suggest to you that you should see some kind of reaction to that, and it would be decently strong. I don't think that there's any reason to expect otherwise. So it's easy when the stock is going down to be really, really like kind of negative and say like, well, it's just garbage, it's going to keep dropping, and blah, 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 blah. That's easy to do, but frankly, the more and more this gets oversold, the less and less argument a bear might have about it continuing down lower and lower and lower. There has to be some kind of a reaction to the upside. If you are bearish, there has to be some kind of pretty major reaction to the upside to kind of reset the RSI on the whole. Now, again, you might say, well, that didn't seem to be the case back here. You know, they didn't need to do that back here. They still had all that ammunition and blah, 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 blah. But this is not even within a range anymore. This was like after a breakdown. You know, when you look at the way you break out of a range, it's not like the same as when you're just like straight up selling off or straight up running up, vice versa. The RSI tends to be a lot more controlled and balanced between highs and lows because you're still in the range, meaning that buyers are still present on the bottoms. You're not just selling through level to level to level to level in a markdown. So it's different. So I understand, like, I'm just making a comparison to this area back here because of how low it's come. But it was different. Like, this had already broken down. And frankly, again, on the 30-minute, this is the highest point right here. If you had bought there, you would have been maybe screwed for a little bit. So you don't necessarily just want to buy it because it's super low. But point being is that typically when AMC gets pretty low on RSI, it tends to have good reactions. At some point, it indicates a turn is likely, and I'm looking at this on the 4-hour thinking. It looks pretty solid to me. And if I'm thinking that this becomes a breakout for a range, then it would maybe be something similar to like this, where you come back up, and I know I've got it kind of drawn long here, but you would just come back up and essentially get ready to go. You know, you'd have a big push that sort of pushes beyond maybe where you need to go, and then meaning like I would suggest it's probably around 5 or something, somewhere between 485 and 5, and then you could have it build back down and then take off, and you'd be fine. Like, there'd be plenty of room to make a really big markup. Totally possible. Okay. And the reason that I'm not as big of a naysayer right now as maybe some is because we didn't get anything to me that looks like an upthrust. This just kind of curved down, and you can see it with that pink. Had we come back over here and had like an upthrust and return back to, again, the top. And it would probably be, again, back above maybe 505, a little too early, and then drop through. I'd be having a very different conversation with you right now. I'd be talking about we're probably done. So, so yeah, basically what I had thought was that we'd come back and test 490, then come all the way back down and check that 440 level. Instead, we just kind of bounced off of 480 and then dropped. We didn't come back. And again, if you were only watching streams, you probably wouldn't have seen this. So it's not, you're not missing much, because I was obviously wrong about the nature of this. But in some ways, is this better? I think so. I think it could be potentially better. There's a part of me that always, like, whenever I get something wrong, I'm like, I wonder if, I always think, like, I wonder if there's something else in mind that I'm not thinking about. And typically it has to do with liquidity. And so in this case, it's probably going to be because of the desire maybe to go back for low liquidity, but also the fact that maybe we didn't need to do it. Like, they've been using these up thrusts to kind of help drive the price lower, but this probably came back as, I don't want to say tested positive, it sounds weird, but frankly, like, that's all there is to it, and that's all there is to it. And on Tuesday, it created like a 4 top right here, didn't cross the creek, I guess, so it didn't break out, and then that's what resulted in that final drop. It's like there wasn't enough strength, I guess, to take it back up, or there was too much selling at this point. You can see it in the ramp that it just kind of kept ramping up through this bottom. So I would have suggested to you, and I did, that this comes back up first, because I thought this was going to like hold right here, and it did not. So that's the big difference. It's the difference between, again, this and this. I mean, it's very simple. And there's not much you can do except wait. Unfortunately, I mean, you can guess and you can kind of make estimations, but and if there's already been a breakout, like, it could change things. So if, like, it's already broken out of a wedge and it's doing something like this, it'd be different than if it hasn't. You would say, like, well, it doesn't have any kind of extra breakout. There's no extra pattern there. This didn't break out. It just kind of stayed low. And to me, could it be possible that that was the last part? That was the lowest low? I think it's possible, but I think that there's something about this number over here on October 3rd, excuse me, and October 4th that really piqued my interest. And it's a combination of trajectories that are meeting here. And this is one of the trends from way back here. And it may be a little odd because you're probably looking at this like, well, I don't know what that means, It's strange. I think a lot of us, including myself, used this one early on. It makes sense because it's the 2 lowest points. And this ends up being what I think is the midline. I mean, I think it's the middle of the 2 ears right here. It's that wave across. So it's important. It's not insignificant. It's also part of like a major wave structure, I think, on the whole, right? And that also kind of measures out to this area around October. But this other trend actually has more points that are hit. It's basically 4. And it's the trend that is established after the lowest low, after the selling climax. So there's a selling climax, comes back up, finds support again, takes off, comes back, checks that support again, and then slightly dips below it during the creek check, right? During the little mini spring here, and then it takes off. Well, that trend hasn't been met yet. It's way out here, and you can see it intersects these trajectories. And these aren't just trajectories in this case, they're actually trends, because there's a bottom right here that both intersect. And in addition to that, yes, also trajectories, because they did follow these down. You can see it's almost like an iteration of of breakdown, like bouncing. You can see the bouncing outward, and it's getting steeper and steeper. That 440 ends up being that point of interest for, I don't like saying point of interest because I feel like other people say that. I don't know if it means the same thing as it, I don't know if it means the same thing to them as it means to me, but it's a nice little conjecture here, right? That there's a point that there's a really strong intersection of a lot of things. And then another reason that really stood out to me was because this particular wave right here, this particular setup, and I'm going to botch it up probably because I can't remember exactly how I measured it, but I think I measured it this way. Yeah. So from this bounce to the second bounce, I looked at the middle as where does it cross the creek. So bounce 1, bounce 2. Remember when we did this on IWM? Well, it's easy when it's like smaller and you can see it really clearly because it's just a waveform structure. So it's just showing you like, okay, wave up, down, right? And if you're just timing that out and it's fairly flat, it's almost too easy, like not to be like weird about it, but it's almost too easy, right? Because you're kind of like, well, sure, like that would make sense because again, the wave would be fairly even paced. You should be able to time it out fairly well. I think this one times out to the same date, which is really telling as well. So I'm like, I look at this and I'm like, yeah, there's a lot of things here that make me think that this is, as the year 2 goes, kind of like that bigger macro wave finishing, but then also not including the beginning, because originally we included the beginning, but I don't think you should include that anymore. So that jump through here, and it all seems to kind of terminate on October 4th. So is that good? Is that bad, Booksy? I would say that it's good because what this indicates to me is that you're very oversold. You've hit kind of the lows that you were expecting to hit. You've got a small waveform and a large waveform that are ending roughly between September 26th and October 4th. On the macro picture, on the big picture, this wave, this was the bottom that we picked out. It's not like we picked out another major bottom here. Like, I mean, it's kind of, it is what it is. You know, it's settled itself in the move down. So I'm like, at this point, I'm kind of the opinion that like there's not really a whole lot of reason to like be super worried. I'm not going to change anything beyond just saying like I think it just hit the low first, and that what this means to me is a couple of things. It could be that on the one hand that maybe this, because this became steeper right here, and it just did, that maybe this breaks a little earlier than expected and then ends up pushing up and then coming back down again, which might seem a bit annoying to you. But it's about the only thing that I can really see right here is sensible. When you go back and you look at, like bottoms on AMC, they tend to be spring bottoms, right? They tend to trade in this like sideways range here. And again, you might say like, well, this is all easy because you're making it up or whatever as you go along. No, this is what we had on the chart. If I could find the silly thing, I think I deleted it. This is the same thing we had on the chart before. This is the same pocket, and I had like a chop right here. This is where I would have expected it to be. It's very low trading. So it's not, I'm not making anything new up here. This is what we had on the chart like a week ago. Again, that's a comforting thing because you really haven't deviated very much at all at this point, which is good. So one of the things we had thought was that if it bounces here and stays high, and the other was that if it goes low, that it basically bounces in this area. And so one of the things you see on gold, one of the things you see on AMC is that, what? If you're listening only, I just accidentally flipped over to gold. One of the things that you see is that quadruple bottom looking thing. And it's basically just a big, or it's a smooshed up Wyckoff, schematic. Kind of looks like this. Kind of looks like what we're seeing here a little bit on the RSI on the big picture, but and even maybe to some degree right here as well. But I don't really want to focus on that. I just want to focus on the this emphasis, like this is where that might happen. So I'm kind of curious at this point if what we get if there's only two options here for bulls, I would say the two would be, one would be that you just kind of take off and that's it. I don't know if that makes any sense, but you come back up to 465 and then you just kind of leave. And that's about as far as I could take you on that, because we'd have to kind of wait and see what happens. But it definitely seems like that would be a possibility for like an early move. The other is, and I surmise that that could be Thursday. Again, it has to do with these markers. They're both on Thursday. And there's two potential lows based on a couple measurements that I made. The other is that you bounce out and you trade this zone here below 465 and between these two. And so it ends up being like an auto reaction. Then you pull back down. Then there's a phase B top. Then you come back down again. And this ends up lasting about a week. Again, it may seem like, well, that's pretty darn long, you know. Yeah, I mean, it's a bit of a burn, you know, in terms of sideways. It might not be fun. I'm going to go down a little bit to like the 2 hour and give myself a little more drawing space here. I would imagine that if this happened, you would go for a spring here in like that final Thursday move. So the auto reaction here maybe takes you up past this creek, maybe not, doesn't really matter. And then you break out, you hit the phase B top, you come back down, you bottom, and then you dive beneath that bottom on Thursday, and then Friday it doesn't go anywhere. You guys are like, what? Yeah, but I kind of think that what would probably happen is that you'd hit a low. I know it's weird to say Thursday because you're like, why not hit it Friday? I think you hit the low if this is the way I'm imagining this is kind of the way it works out, just based on how a spring often builds out on AMC. You'd expect this kind of quadruple flush motion, 1, 2, 3, 4, and essentially a giant M, right? I would imagine at this point you would see this drop Thursday, and then Friday you would just come up to just above to kind of push 460, but then actually land back down at 450. Now, some of you are going to say, well, that's just Max Payne dribble, right? You know, and part of me is like, yeah, kind of. But it's also the nature of this to kind of delay, because as you come down in a parabola, I'm going to get rid of this one. As you come down in a parabolic motion, you generate these creeks. And this is another reason that we often see this on the bottom of these we'll call them like high heels, stiletto moves, where they're diving, like nose diving. We see these massive flushes because they're jumping over like multiple creek bodies. And so I know that I just doodled it, right, based on levels, but they're not really that wrong. And that's also kind of interesting to me, because I'm like, well, clearly like there's some continuity here, right? And I'll make these like a bright, let's do like a bright pinkish color so you can see them. So what these are is every time we came back down, we were doing these weird little diamond structures. We did like 1, 2, and then 3. Every time we did one of these diamond structures, we basically generated like a new creek, but it wasn't a creek that comes up higher than the previous one or even meets the previous one. So we ended up with these creeks that basically get steeper and steeper and steeper. And I think this is part of the setup for, it is part of the setup for a potential bottom, because every time this happens, you get this kind of reactive, like massive flush and then another massive flush, because there's a series of creeks that are being broken, but they're breaking in like a 1, 2, 3 manner. And you're basically getting these big legs, big drops, because they're steeper in the beginning and then they kind of ease out and they're not quite as steep at the end. So when I look at this as like an arc, I'm thinking in my mind that the trends or the creeks, however you want to call them, that are being established are basically doing so in a a way that would mean that if you're going to break over these, you essentially have to cross them. I don't want to say sideways, but usually that's the case. So I'm thinking that this seems very, very likely. And if this is what ends up happening, I think this is the spring. And again, you may say that, hey man, we've been talking about this for a while, and I don't know if this makes any sense, and blah 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 blah. Just remember that like this is almost exactly what I drew before when we were way up here. Okay, I don't know where that drawing went, but we can go back and look, and it's like right here. Okay, because if it were going to go down for this bottom, it would probably bottom out and trade between 460 and 440, which hasn't largely been traded. And as long as it doesn't have some kind of super crazy breakdown right here, right, going down to as low as like I said, it can go as low as like maybe 425 and still be okay. In my book, like I would be like, at that point, like, uh-oh, but at least it could happen. So you want to keep that in mind. But on the whole, like this is pretty much exactly what I thought was going to happen if it came low. So aside from like not getting this initial push and then drop correct, it's overall it's looking good. So this is my expectation if it does form a bottom. I'm not of the opinion it's going to take much longer than that. Springs do not take longer than 9 to 12 days. Usually by the time you hit that low, it's a 9 to 12 day period, trading day period. And so at longest here, you're looking at October 8th. Makes sense. October 8th, 7th, and 8th is one of those key levels that we've been looking at. Key dates, sorry. And that's typical of AMC. Where does that come from, Booksy? Every single bottom. There's not a single bottom that goes significantly slower or significantly faster than that. When it's like a true like exit of a range. Even like the largest of ranges only took like 12 days, trading days. So grain of salt maybe, but that means that if this is indeed the bottom, that you would know by October 7th or 8th at the latest. Interesting. All right, I'm looking at comments now. Kind of hit peak viewership and then died off. I assume there's some kind of talk going on. That's what you're saying. I have no idea why Adam Aaron would be speaking at something, but that's fine. I guess it's safe to assume we're moving down a long hill. I mean, if you weren't paying attention at all, I guess you could assume that. But you could do whatever, you could say whatever you want to say. That's not what I said, but okay. I mean, that was a few minutes ago. Maybe you listened. I don't know. Yeah, for someone to say like we're just gonna keep going down this hill, it's not like out of the realm of possibility that this just chops and becomes a trend, right? And you're heading down indefinitely. Sure, why not? But it kind of ignores everything else that's going on in this stock right now. I think that's a bit silly. Okay. I'm not of the opinion right now that we're necessarily going to wait forever. A lot of folks are going to say November because that's the next big catalyst, right? It's like, oh, this catalyst didn't work. Guys, I don't know what to tell you, except that one of the things that I said, and I'm going to just keep it in my my own ears, right? Between my ears here. I already mentioned this before, but I said that when FOMC hit, my thought was that we probably would take a nosedive. Like, it's the best time to sell the news. And while you have people buying in and FOMOing, you can use that to help drive the price down again. And it also makes sense because, frankly, if the stock's going to go up, sometimes you go down first. You need to let the sellers do their thing, get the weak hands out of the play, and then let them cover, right? Or make them cover, I should say. It really doesn't make sense to me to look at an action like this after experiencing this range and just immediately assume it's just going to keep going down, especially given everything we just talked about. I think that's a bit pessimistic. And frankly, it's a bit short-sighted too. And it's almost silly because you're kind of ignoring the TA that we've already done. It's like back here, and I'm not talking to any particular person, but like, I don't know, back in like before FOMC, maybe around Thursday or Friday the 13th, I definitely remember talking about coming down to 465 and maybe 450. There's only a few people I think that are out there that really thought this was the bottom. And I wasn't really one of them. I've been very skeptical about this as the bottom since we hit that 461. It didn't look like a spring to me. There was no real great setup for a floor. That was my biggest concern. It was like the floor would then have to be like, I don't remember what it was, like 472 or something. It's like, it didn't really make a lot of sense in the grand scheme of things. There was no macro, big picture relevance to those numbers, except for the 460, but it was like, it just didn't look right to me. So I couldn't have said it any more than I already said it, that I didn't think this was necessarily it. We could see this push up and come back down. I think my first thought was that, yeah, this could be a, like a breakdown here, and we could end up coming back low for like a spring, and then we started looking at those levels. It's like, so why then, when it happens, would we just suddenly flip the script and say, oh no, woe is me, this is going to keep going down forever and ever? That doesn't make any sense. It doesn't have to be your TA. I don't care. You don't have to listen to anybody, myself included. But like for me personally, like I did that TA. I already was thinking about that going into FOMC. We talked about it frequently for weeks. So it'd be really odd if it happens to then suddenly change your mind just because it feels bad. Does this feel bad? Does it feel bad coming down and coming down and coming down? Sure. Like low key for me anyways. It's low key, but it feels bad. Like I'm not happy about seeing red all the time on AMC. I'm not. But at the same time, it's like, well, I mean, it was in the cards. It was definitely presented to us as a possibility back here, and it seemed pretty likely to me after Friday the 13th that we wouldn't see a kind of major move to the upside. We'd probably see down first. That's called sticking to your plan, sticking to what you were the most confident about. And even if it's like 60-40 or like, 70-30, like you always have to keep in mind the possibility that you're wrong about this or about that. I've been very much on the side of like, this was probably not the bottom. And I would have, if I had to give you odds, I don't think I did, but if I had to give you odds, I would have been like 30-70, this was the bottom. Like, I think it was very unlikely. It's not impossible, but it seemed very unlikely to me because of the way that it hit and then reacted. It just doesn't look like a bottom, or it doesn't look like a spring to me. There wasn't the volume to accompany it either. So the whole thing just smelled to me, and I think at that point you're kind of battling people's preconceptions and expectations. And if I'm saying things that aren't meeting your expectations, probably gonna dismiss it. But I'm not trying to give you crazy expectations here when I said it, I thought it could come up and then come back down after FOMC. and go ahead and go for the spring. I will say this, it's taking a lot longer than I expected, meaning I thought after FOMC we could have a pretty concise drop. I wouldn't have imagined this kind of chop to the downside over the course of like a week plus, I would have thought it to be more quick. Go ahead and get down there, do the stuff you need to do, and get out. But it is what it is. It built out slow, and now you've got to cross these creeks. And to me, this is the most favorable bullish outcome right now. And I think it's possible. But I want to say that at the same time, we're not going to dismiss every single other opportunity. We're not going to dismiss every other option here. Like it couldn't happen. That's silly. So we're still going to have to kind of come back and look at this and think about what does it look like if it's bearish? How would things change? Where would we maybe see that change? One of those things could be coming up too high right here. If this came up like way too high, that could be bearish, coming up and breaking above resistances and then driving the price through to try to get through here could be very bearish. So there's little things like that we can look at and consider. But for today, going into the rest of the week, I would suggest to you that this idea of being at 450 tomorrow probably makes the most sense. That we could get a decent push up today. This is your auto reaction potentially. If it has high enough volume, it comes back up, checks these drop off levels near 450s, maybe a little bit higher up to 460. Probably going to be an auto reaction. If that happens and it goes high enough, that means it broke this creek here, and then you're going to see it retrace probably tomorrow, and then that would be that, right? You'd end at 450, and then Monday, maybe early push up, phase B, push this creek right here, and then trace back down, get the retest on that other creek. This creates a bottom, phase B bottom, and you push up again. You reject off 450, and then you come low for your spring. And this is very boring, but it could take all week. And if that happens on a Thursday, then by Friday, we could even be out, back up at 450, ready to go. And then it's done. It's over that creek. It's ready to go. Monday, back up to the next one, which is like 475 area right here, right? So the movement out right now does seem adequate. Like the way this is set up definitely seems adequate for a spring, in my opinion. And it has all the right motions to it. Okay. Secondary concerns here, looking at IWM. IWM is the Russell 2000. So this is kind of like what I drew, but kind of not, right? So I thought it was going to come down sort of like AMC. I thought it was going to come down faster. So see, I was like wrong about one. I ended up being wrong about the rest because I had imagined this would come down much quicker and then go ahead and test this level early, the level that we're currently just tested off of, like 217, then push back up to 221 and then come back through. And the reason I thought that was because there was a creek that made the most sense to me to come check. We didn't do any other checks on it, but also because I imagined, again, that this would have been the most important target right now, which is around that 212 area, that region. There's a gap there, and it's not just the gap, it's also a massive creek jump retest. And so it's setting up much higher than expected. From a head and shoulder perspective, you'd have to argue that this is not... You could argue two things. One is that the neckline is kind of raised, in which case the breakdown is higher, or that it never actually finished the head and then the neckline's lower. Either one is technically possible, so it kind of depends on how you look at it. And what I mean is that if this is a raised neckline, then surely like this checked already. I know it's a little odd, but your target wouldn't be very extreme. It would probably be like there, like 216, because the neckline would be coming up this way. The other opportunity, or the other option here is that the head is, and I know it doesn't have to be a head and shoulder, but it already looks like one. And I figured it would bounce off here. This would be considered the second shoulder. And so instead you have a little bit of a bigger move. I'm doing like 50%. It's really like 51%. But then the breakdown would be here, and that would get you to that low at 214. I think that's more likely. So at this point, maybe a better way to do this would be to look at this as again, like a head and shoulder kind of breakdown with the potential to come down to like 214. I think in the end, it'd probably have to come a little bit lower because I don't think that checks that creek adequately. So I still think potentially like 212. And then you don't want it to break below there. We've talked about that for a lot of reasons. There's a lot of reasons why you wouldn't like, that's not ideal. Even though, yes, there's gaps way down low down here, you don't really want to go back through that creek again. That's where you get into the, it's not gonna happen until November kind of thing. You know, that wraparound probably happens if that occurs. It doesn't hold. But right now, we just talked about those M crosses. This crossed up. If it can hold above this like 212 region, there's really no reason to think that it goes back down again. It doesn't make any sense. Like, that's the check on the creek. So I find that to be very comforting because it's, even though this has been really slow and boring, it is kind of still consolidating RSI wise on higher time frames. And I think that that final flush, if it happens here and it's high enough down to 212, would be adequate. I think you could see it push out, and yeah, I think you could have a really early pop. I haven't changed this. I mean, I know it says October 4th or whatever, and that's the same date as AMC bottom. How could they both be bottoming? How can one be bottoming and one be going up? Look, I don't know, man. I don't want to guarantee that this is the way it's going to go. It could very well be that this is actually where that bottom is, going into the fourth, and that I got it slightly off, and I would just be like, oh well, like, I don't know what to tell you. I was off, but all I can say right now is that in terms of like the trajectories and the ramp, it's not a huge window here. I would probably be able to go back and draw this out slightly differently, to favor one or the other, and I think I probably could. But still, the date between like October 3rd and maybe the 10th, that's kind of the window here. And there's not much else. Even locally, these trajectories have confirmed that. So we're talking about a really big S-curve here. We're not talking about some dinky little thing. We're talking about a macro wave here. And yeah, I don't personally think there's much else to look at. There isn't another midline as far as I can tell, so we'll see, Somebody asked me about WTO. I don't want to spend too much time on it. Basically, when it broke 58 cents, I felt like it's probably going to come back down to 50 cents. And it did come back down to 50 cents. It ended up spending a lot of time creating what looks to me like a head and shoulder. So it went back up and checked these resistance levels and pushed down. It had a head and shoulder breakdown. So at that point, it to me looks like if it dropped beneath 48 cents, that it potentially comes all the way back down to 43 cents. How does this avoid doing that? Basically, it's a fake breakdown. So if you have a neckline and it drops the neckline, and in this case it dropped it, hooked, and it started down, if this were to manage to come back above 50 cents here, that would be a reversal. So it's basically like a fake out. Okay. That's about it. That's about as much as I can give you because the only target I have is 43. Well, Booksy, what about all that other wave stuff? It didn't follow it. You know what I mean? Like it broke out. It looked like it could have followed it, and then it just failed. I'm not saying it's all over and there's no possibility. I think those targets are still very much there. I don't think they're bad targets. I think 130 is a good target. It's a great target for WTO. But you can't control, supply and demand in the market. And if it doesn't have the push to get you there, it just doesn't have the push to get you there. You can widen this wave out and try to finagle it and make it something that it isn't. And we had wider waves that we looked at too early on, like that went farther out. But that's it, man. Like, to me, that's the wave. I don't think there's another one. I think it matches beautifully with the midpoint here in September on the 10th through maybe the 11th. That's pretty much it. So I think it failed to capture the wave. I think it tried, it had to break out. You can see it. Like, clearly that was the bottom. Like, it's not a question in my mind whether that wave existed. It clearly was there, but it just didn't take it. What happened instead is that it broke this creek and just went the way of weakness. Like, started kind of bleeding back down as if it was going to go back and check this other level on these trends, which is kind of what I suspected when that 43 cent popped up. So again, unless it's like a fake out to the downside, like a bear trap, it comes back above 50 and maybe rocks it from there, I don't really have a lot to say about it. I'm not saying it's completely dead as a play. It's a penny stock kind of play. These things can be extremely crazy. Sometimes they don't obey the rules that you might expect. There's other possibilities here, with this jumping the creek. Maybe there's another one and blah, 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 blah. We can keep going. But that's where things start getting a little bit dicey, It's like, yeah, there's this did jump another creek. So it's kind of like we could keep going and just saying, well, it's still working its way out. Well, it can do that while still coming down, The important thing was momentum, and it didn't keep the momentum. So when it got the momentum it needed, instead of holding here and advancing after hitting that support again at 58 cents, it just broke through. So I'm not completely dead on the play. I didn't invest enough in it to really be worried. Wanted it to work out, but it is what it is. So when I look at this now, I'm kind of looking back at these pivots and targets. I mean, I said pivots or targets for these top markers. Did this end up being a pivot? Yes. The other one was like right here on this other volume spike. They've definitely been good in terms of pivot points, but unfortunately there's not really a whole lot of hopium left except for this maybe Friday one, right? And that's coming up tomorrow. So the last one was Friday the 20th, and it pushed up, and then this one is, in my opinion, kind of like the final one that I could probably do, and that's Friday the 27th. So I personally think that we'll probably know if WTO is going to go or not go Friday. And if it doesn't make a strong advancement Friday into Monday, I don't think it's dead. I just don't think it's easy. I don't think I can read it anymore. Like, there's nothing else to really look at. Probably have to reset the chart, do it again, because I don't know what else to look at. So it's not, again, not necessarily a dead play, but it has to come back above 50 cent. And I think Friday, early morning, kind of like what happened back here on Friday the 20th, is going to be your next best bet. I'm a little concerned it's just going to do like another pump up to like 60 cents here, and crash, but we'll see. So it would have been good for swing trades, but like right now it hasn't made any kind of major swings. MPW just hitting on the outer rim here. MPW is looking fine. I don't really feel like there's much to say about it either. I haven't reported on this on the Discord group very much because I'm of the opinion that there's not much to say, like that hasn't already been said. Talked about the possibility of coming back down to like 540. Talked about the possibility of coming pretty low, maybe back down to 481, the gap even. But I think that as you see this, it's important to note, like, all that's really happened is it's just created a range. So there's not much else to say. It looks a little weak to me because it immediately like kind of had an auto reaction and pushed low and tried to push up again, which is expected. I didn't really expect it to keep going like crazy. So it did this kind of like bounce out thing, and now it's just kind of building out. To me, again, personally, I think it looks a little bit weak, and that to me would indicate it's probably going to come down, next week. But I'll leave the window open, like we'll see what happens. This is one of those stocks that I think right now it's possible that the unlikely happens because of the amount of shorts that were in this play, and how long it would take them to get out of the play. It's a very substantial. We've talked about this, but it had like 50% short interest. I mean, it was crazy. And then it was like 17 days to cover. Well, they're not covering, right? How do you know that, Booksy? Because they're not. With 50% short interest, the amount of shorts that were in this play, clearly like a bunch of people are not covering. So what are they waiting for? They're probably waiting. I mean, some of them may have covered back here, but I think a lot of them are probably waiting for what they think is most likely going to happen. So I think personally, if they are covering, they're covering for a pretty extreme loss, and they're doing it very mild-mannered, like they're not rushing for the door. I think there's an assumption here probably that this is kind of a UTAD kind of thing on the part of bears. Some of you gotta be like, what? Is that possible? Sure. Because you have this push up, and then you've got this kind of low-lying M cross, and you've got another push up. So you're saying that this could be a giant distribution, Booksy? Sure. Why not? Why not be a giant cat here? You have to understand that like there's a bear side to like everything, right? It would be really silly for me to look at this and think that that's not possible, right? The idea of pushing up into this range and doing some kind of distributive action seems pretty likely, right? And from a bear's point of view, this might be like what is expected. Why would they worry about covering if it's going to come back down and they think it's going to drop through here and just keep going, Like, that's the kind of mindset that a bear would have, is like, well, we're just going to short it back down or whatever, So I do think there's going to be a moment where this is taken advantage of and they're going to try to drive it back down. My theory is that it doesn't do that in the way of a UTAD, but rather does it more in line with the way of a creek jump, because it did jump the creek. So in the case of like an M cross, every time there's that double push, you might look at that and say, well, I think it could be bearish. Sure. I mean, it's totally possible. We were talking about that on AMC earlier. Like, there's always that second push here, right? And it's like, well, anyone can look at that and say that they think that that's bearish, because if it comes above the top, it could look like a UTAD. And ultimately, a lot of it depends on what you think is going on prior to that, et cetera, et cetera. It's a mixed bag, right? And that's the thing, is like, I look at that, I'm like, it's probably where I'm at if I'm a bear right now and why I'm not covering. And what it really takes, and I'm going to just be straightforward with you, what it really takes is it takes an operator to just stop it and to advance it again. So that's why when we looked at this originally, I said I didn't think that this was bad, but it looked to me like this is where you would have that cat ear retracement, and then you would have the bigger move after that, and you'd have a pretty substantial move back to the top. Okay, if you look at the wave down here, it's kind of slow and boring, I know, but just look at the price target for that, and then consider where that would mean if this is going to return back to the top of this channel. Where does that kind of intersect? I mean, I'm not making this up. You can see what I just did, hopefully. And you can see that clearly, like, the bulls have something else in mind. They're thinking about this like a gigantic wave, right? So they've got this distance measured out down, and then they're going to use that selling pressure to kind of cause covering to come back up. But the wave has to kind of complete in the right spot in order for this to work. So in order to get back to the top, you would say like, well, where does this intersect? And it's kind of straightforward. You can just see it visually. Like this intersects perfectly between the top and the bottom at a specific time, right? Meaning, in order for you to travel the correct distance, quote unquote, on this wave out, you would have to come back down to like the 520s or something like that, and then push back out. And you can see the adequacy, I should say, of that as a move. Now you might say, well, Booksy, what about that prediction that it's going to be here on October 7th? Well, I added another one on September 23rd, and some of you may have seen it, some of you may not. I know that this is a stock that has a lot more interest than some of the other ones we look at, because I've been talking about it for so long, and some of you have already reaped a lot of benefit from it, and some of you hopefully have gotten into it long term, because I think as a long term play it's better, as opposed to just short term play, which is kind of a mixed bag, right? It could be. As a short term play, I'm sure you would have made, went from like 3% contracts to like 15% contracts, 3 cents to 15 cents. So you could have been like 5x on that, on this trade from here to here. Like that's how powerful that move was in the options chain. But regardless, this particular move right here on the wave would be my expectation. And the dates that I picked out are based on a 4-year trajectory. So 4 years ago, placing a trajectory on this chart, you'd have to determine where that intersects and what level and where you'd expect that to be. And there's 2 major lines. And I picked one based on what I thought was the most powerful. And I'm just going to gently recap it. I won't do the whole thing. There's a 50% marker back here. And I picked one based on what I thought was the most likely intersection for that 50%. And I've done 2 lines at this point. And I did it based on this particular region from June 22nd through roughly August of 2023. Excuse me, June of 2022 to August of 2023. It's almost a year long, but it's the actual trajectory derives from November 20th. So this is like a massive 4-year cycle, right? And basically, like that's kind of it. Like there's not much else to it. It's based on a number of things. I've gone through this before. I did a longer evaluation of this last week to talk about what I thought that was, why that might be happening. There's two targets, okay? I've, for the longest time, been using this one, the 797 to 820. That's the one that I thought, well, if it strikes gold, it strikes gold, right? So this is the area I've been talking about as my potential exit at the top of this channel. Could it go farther than that? Yeah. You know, we found that there was a decent chance, and it's about a 50-50 from the top that I picked out here. But there's a decent chance it could even go up to like $14 if it's a wave 3, because it's an extension. There's fib extensions all the way up to like 13, 14 bucks. Does that seem crazy? Sure. But we're also talking about the same kind of move that AMC would be making, going from like 4 5s up to 15 to 16. It's not any different. And in fact, this actually has greater short interest, you know, longer days to cover kind of thing. Like this is much more potential for a squeeze than AMC has. And it's got this really long buy-in on the bottom as well. So, I mean, there's all kinds of stuff here that we could look at. It's already jumped the creek, you know. So I'm like sitting here thinking to myself that this seems pretty inevitable. But as we get closer and closer to the date, you know, you get a little pre-game jitters, and you're kind of looking at this thinking like, okay, I think that it's possible that I had it wrong. And if I had it wrong, then the next most likely thing is that it's actually 677, not 797, because there's only two major creeks that make any sense, and it's this one right here and then this one right here, and both come from the same point. There is no other one that makes a whole lot of sense. You might say, well, there's one in the middle. I can see it right there. I'm like, yeah, but you got to go back to the beginning. And this has been one of the most highly speculative things, back here rather, one of the most highly speculative things that I could possibly have ever done in the market, which is to try to take a very small trend from 4 years ago and derive a target that's supposed to hit 4 years later. I knew that going into it. The confidence I have in the play. I've obviously stuck to my guns about it. I talked to you guys about this trade for months and months and months now, and I clearly have conviction about it. Part of that conviction was that one of these would definitely hit, but I hadn't really picked, I had picked the higher one. So it's important to note that like my expectations have largely been for this higher number to hit roughly around this time or on that mark. Make no mistake, it is Monday, October 7th. Meaning, if it doesn't hit that target Monday, October 7th, if it hits it later, October 18th or something like that, that's fine as far as like a price goes. We can look at that and celebrate and say, yay, it hit a high target. But it does not change the 4-year cycle. Like it doesn't change the 1407 bar cycle. Like it just doesn't. So I got our 1407 day cycle. It just doesn't. So I got to say, I know I've seen 4 year and you're like, well, you're measuring from November, so shouldn't it go to November? No. And this is the weird part about this cycle. And I don't really need to explain it to you except just to say that it is what it is. I didn't make it exactly 4 years. I did it based on a bars pattern count, a days count. And and it worked. And it didn't work the same when I did it November to November to November. So I didn't use calendar dates. So I got to say, maybe it hits this target in the future. And I think there's a decent chance if this holds here, even going out into November, if it took that long and it held all the way down, maybe bust up to hit that target and then it goes down in November and then it breaks back out again. Like wonderful. We still make the money. Nobody really cares. If it's strong, it's strong, right? We're going to evaluate it as if it's its own chart and it doesn't have some weird prediction looming over it that Booksy made, 6 months ago or 7 months ago. But that date is not negotiable for this. So there's a strangeness to it because even if it hit this target later, I might be happy about that, but I'm going to use October 7th because that's the date. Right. And I had a guy come on last week and say, well, why don't you use the 4th? That's the Friday. Because it's not the 4th. It's always a Monday. Monday, November 30th. Monday, January 23rd. It's always a Monday. Monday, March 15th. You guys are like, yeah, well, those are completely different dates. Yep. May 11th. They're pretty close to quarterly dates, but that's not the point of this, right? The point was like, I found something, it worked in a specific time frame, that's the time frame, so that's all there is to it. So what that means is that if I'm right about this, then it does hit, let's say it hits 677 on the 7th, that's going to be the date that we use for the next 4-year cycle. Some of you guys are like, God, I hope I'm not here in 4 years. Well, hey man, this is the bottom cycle on MPW. And it doesn't really matter if you want to, look at it from a big picture or small picture. Like the waves here are pretty straightforward, right? This is most similar to 2009. It's the most similar to that. And in that case, this bottom wave right here, actually, this is like the halfway point. I mean, it's not even close to being done. Even though on the daily, it's like already getting close to overbought. It continues to the upside almost without a lot of hesitation. This is the biggest pullback in May, I guess, after 2008 recovery. It continued to the upside all the way until the 2013 mark, and then it starts tracking back down. And that to me it's okay. This I like. Sorry, I was talking to my cat. You didn't do anything wrong. this is something that I think is important to note, because those cycles of like up, down, this is the down cycle. We're finishing it. And the rest of this cycle should be up. This is why I've been advocating this as like a long-term play. And I think with the potential of this breakout, this widening, which is kind of really obvious, should have a potential to go all the way back up to the 20s. I think originally, I don't know how I did this, but originally this is my estimation without actually knowing for sure. So once we get to this October date, the next one is August 14th, 2028. So let me ask you this, okay? I can't prove this without a shadow of a doubt. I know that. There's no way I could do that. But if you did have the knowledge, right? And this is one thing that I find very interesting about the AMC crowd, who love AMC, but they don't like anything else. If you had the knowledge that a $5 or $6 at this point, I mean, even back here it was like $4, right? But if you had the knowledge that like a $5 stock was going to be $25 in 4 years, like what could you do with that information? How would you trade that? What would the plan be? Would it be to just buy shares and hold it long? Maybe, because it does pay a dividend. If it's a high dividend, that's great. Maybe there's more to it. Maybe there's options involved. You could talk about all kinds of stuff. But my point is that like, I've looked at this as like a big potential like rainbow road kind of situation where like I'm going to get not a shortcut, but get a clear path to something that could be very profitable if this is a massive cycle to the upside for the next 4 years. It's hard for me to look at that and sort of look away from it. And this is a medical properties trust, which means that it's dealing specifically with medical properties and nothing else, real estate properties, okay? And one thing that I noted, which we probably kind of comes as sort of obvious, was that after that 2020 drop and that, weak kind of reaction to it, much like the rest of the market, it took a nosedive, but it did it much later. And I'm very curious about it because I wondered about COVID, and I wondered about things like how, the Affordable Care Act, Obamacare as they called it, may have affected something like medical properties or whatever. I've been wondering about that for a long time. And then I read this BlackRock article about how they were investing in medical equipment, and they're also involved in this quite heavily. And Vanguard is like got 100 million shares of this, which is ridiculous. It almost doesn't make sense to me. I'm sure they're loaning out a ton of those, right? But I mean, they've got an abysmal amount of shares, And I look at this and I'm kind of like, there's obviously a disconnect here between what should be a very consistent industry. Like hospitals aren't going anywhere, and privatized hospitals in this country, aren't going anywhere anytime soon. The idea of the medical industry losing money isn't anything new. I mean, that's why they charge you an arm and a leg to go to the ER, because half the time people can't pay for it and they can't turn them away, right? There's all kinds of reasons. And there's all kinds, I don't want to get into like a political discussion about this, but like the idea of like hospitals in and of themselves, regardless of them losing money or not losing money, will largely depend on certain political things, but like whether or not they're getting paid, right, adequately. But at the end of the day, like they're not going anywhere. You're always going to need hospitals. You're always going to need them. So it's like, to me, it just seems like, why is this even like a debate? Like, this should be a no-brainer, And I don't know exactly what happened back here, but all I know is that from what I've been reading is that there's been quite a bit of turmoil in terms of some of their tenants, and now it's done. Like they're dealing with it. It's over. So it's funny to me because the AMC crowd, anytime I talk about other stocks, and I visually see this, guys, it's not me making stuff up in my mind. Like I visually see the the chart, and I'm a chartist, so like I love looking at the chart and watching it distribute during the day. And it does. We had a big S curve this morning for about an hour, and then ever since then it's been distributing. I got cat ears and everything to prove it. It's always because I start talking about something else. And I'm like, at some point, if you're going to trade in the market, you're going to trade other things. You're not going to trade just GME and AMC. And I get that people want to hear about that. I do. I get it, man. But I can give you an AMC breakdown in about 30 to 40 minutes, and that's about all it takes. And then the rest of the day would just be us kind of watching. There's times where I might find something that I really want to look into or discover something new that I want to like investigate further, work it out in a different way. But it doesn't take much more time than that. And if you're going to be a trader in the market, like you don't need to spend a lot more time than that if you have direction. If you know kind of what direction you're going, that's as much as you kind of need to make a decision. So I've always kind of entertained other people when they tell me like, hey, I want to look at this or want to look at that. I try my best. I don't always get to everybody all the time, but I try my best. And I think that this channel isn't going to survive on AMC alone. Like, I just don't think it is. So it doesn't make sense to me to even do it just based on AMC alone. And the longer time goes on, the less and less people care about AMC because the more and more people are getting out of it. Like, that's kind of what it comes down to. The whole diamond hand thing, yeah, it's a real thing for a lot of people, but that they have a very specific niche community. That's not typically the community that comes here and listens to me. They come here and I sound like a shill to them because I'm talking about going sideways, and they're like, oh, he doesn't think it's going to blow up. He's going sideways. He doesn't believe that Moass is going to happen next week. He's clearly like a shill. That's honestly what people say. You guys have heard it too. People come in and say that. So I'm never going to really attract long term. Like, this is not going to work out as just an AMC channel. As much as I like watching AMC and charting it and I'm excited about it, I'm invested in it heavily. It can't just be the sole focus. It doesn't make any sense. And ultimately, I'm never going to attract that kind of, that community that really just wants to see it blow up to the moon every other day. And I'm like, I get it. I'm with you. Like, I want it to happen, but that's not what I can be. I can't be all about that, And the same goes for GME. Speaking of GME, we need to look at that today. I need to fix these charts because they're messy. But yeah, I mean, it's the same concept. Like, I'm all for it, but at some point, you do what you can do on GME. It takes like 30 minutes to an hour, and then that's it. And I could probably come on every day and just do like a 2-hour stream on just AMC and GME. I could do that, but I don't know. Like, that's not my personal goal is not to just do that. I guess that's what I'm trying to say. Like, I would love to be in a position where I have a lot more financial freedom because I'm making good trades and good decisions. And I can't personally do this. I don't know why I'm talking about all this, but I guess I'm just saying it. I say this every now and then, so I guess it's just one of those days. I can't justify coming on and doing this every day just for, $1 and some odd change, in in ads or something. Like, it's not a lot. And so it's like, there's just no reason to do that. Like, I do it because I care. I want to help people, and I want to do the right thing. So, as best I can, make good choices going forward. And that's the reason I started it. But at the end of the day, like, I have to make income, So I wasn't on here at the beginning of the week, and I'm watching the stocks. Like, I'm thinking about them. I'm obviously looking at things like every single day. I'm coming back, looking at stuff, talking about it a little bit in the Discord. but I'm also like scheming to do good. Like I want to do better. I want to have good trades and move forward. And one of those things I've noticed was IWM was like the Russell 2K, just such an easier stock to trade. You can make a ton of money trading something like that, like an ETF, then it just has incredibly high liquidity than you can like an AMC, which is kind of on the struggle bus a lot of the days. Not that AMC doesn't have high liquidity, it's a very liquid stock. It's just that it has really really difficult to deal with operators, right? And it's a hard stock to watch, you know. It's red 99% of the time, and that's just the way it is. And then it has these massive pushes, and you're like, whoa. And the thing is, like, that's the pattern, right? That's the way this thing is being traded, and it's not really changed much in the last 3 years. But for some reason, some folks have an expectation, I guess, that it's going to change. And I do. I have an expectation it will eventually change character, but that it's going to change and suddenly do something like completely different. And I'm not so sure. Like, I think that the change will be gradual. I think we're entering a sort of a form of change now, but it's really a bottoming action, a macro bottoming action. So I still expect there to be high amounts of volatility in the days to come. And actually, it's interesting because we're kind of talking about this right here. This is almost exactly like what I'm talking about for AMC on big picture. I know you guys hate this, but it is what it is. This like big push that we had, it just reminds me a lot of these massive jumps. You know, on this kind of super macro level, we had this really big platform that we came off of, and then we kind of like slumped down. It's really similar to this kind of setup here. It just is. Even with the previous bottom, right? And then like the checking off of that. We did all this, but we did it because of Ape and AMC. We did it because of Ape, AMC split. We did it higher, and then it dropped through there. But then those early reactions and like the expectation that people have that it's just going to go way up. And I'm sitting here like, I don't know. You know, the MO here is typically to drive across these creeks, kind of like this. And we haven't checked them all yet. So there's a huge amount of confidence that I have, maybe unwarranted confidence, but there's a lot of confidence I have that we're making the right moves on a macro level. But it's going to take time, right? And that's why I think we're building out like a massive change of character for AMC by creating a big bottom and then going from there. But I see this early reaction as kind of like just the beginnings of it, like the foothold. Digging your feet in the sand to get some traction, you know? And other people see it as like, it's got to be this kind of boom, immediate thing. But so, like, I guess it's like what I'm saying is like, it's all about expectations. Like, I don't know why over the last 3 years, people's expectations, some people, their expectations have largely changed. But for others, it's like very black and white. They still have the same expectations. And I'm like, look, man, if you're in this to trade it and that's your strategy, and I'm all for it, by the way, I think it's a fine strategy. If you want to just buy low and then just wait, that's a strategy, right? If it worked for Warren Buffett, it can work for you. If you think this is a value play and you think that it's going to eventually be worth more, like I'm talking about with MPW, like go for it. Buy low, wait, sell high. It's that simple. You don't need complicated charts to tell you if you think it's undervalued that it could come up in the future. Like a chart doesn't really tell you that it's going to necessarily do that or not do that if you're just about the fundamentals. You don't need it is what I'm trying to say. However, price action is price action, you know, and it is what it is. It's all we have. And back in the day, you know, your prices, you would get them in the newspaper or whatever, or on the radio, whatever it was, a long time ago, you know, it's like, think about that. You know, all you have is like data, number data, You don't have like a chart. That's why PNF charting was a thing, because it was an easier way to chart with graph paper. Imagine drawing up with graph paper, drawing it out yourself. We needed to do that today. That'd be a great thing to do today for AMC, is to do the PNF again. So yes and no. You know, when you think about professional poker players, you wouldn't call what they do gambling. I think the same goes for stock traders. People that don't know what they're doing, it's gambling. I'm not being rude, I'm just saying. We all have been in that situation before where you've lost money on a bad trade, but to then just turn around and say it's gambling, you're kind of making it sound like you hold no responsibility. It's almost a way of excusing your own behavior or your own loss. I didn't really lose, it's because it's all random. I'm not really a bad trader, it's really just the market's random. That's the way I hear it a lot. I'm not saying that's you. I don't know the way you wanted, the way you said that, I'm not really sure, but I hear that a lot, and that's all I can kind of think about now. It just sounds like you're diminishing your own responsibility for losing money. Whereas like a professional stock trader who's very successful would not ever look at the market and say, it's all gambling, it's all random. You want to know why? Because that doesn't make any sense for their repeated success. There's no such thing as a hot hand. It's a false myth, right? Hot hand where you're gonna keep winning, you keep winning, you keep winning, you keep betting on 7, you keep betting on black, whatever you end up thinking about in terms of gambling and hot hand. That's not true. Probability doesn't work that way. Probability is indiscriminate. It does not understand that you're the one that's doing something over and over. It's completely, it's first of all, it's not a thing. It's not a person, right? It doesn't think at all. It's just numbers. And that's the thing about it, is like real gambling, true gambling has nothing to do with luck. Luck is a construct, right? It's a human idea that somehow you can be more lucky and win and this and this. I'm not going to say here and argue whether luck exists or not. But what I'm going to say is that if you just look at probability, every time you roll the dice, it's the same probability. Unless the dice are weighted and you're cheating, right? It's the same probability like every single time. That is not the way that a professional poker player approaches the game, because they understand that the probabilities change as the deck changes, as the dealer changes, as the hands are drawn, and you're not a good player if you. It's not about counting cards necessarily, but kind of. It's like knowing what the odds are and whether that's a good investment or not a good investment. That's not random, right? And so I think of the market the same way, and I think about how like there's people who sit there and do this professionally day in and day out, and they make good money. There's people who do this professionally day in and day out, and they make astronomically high amounts of money. And some of those people have just gotten lucky. And some of them are just really smart, and they just do it right. Okay? You say gotten lucky, Booksy. Haha. Yeah, but what I mean is, sure, like if you sit there and you place $1,000 on a stock, yeah, there's a 50-50 chance you're right, but that's not necessarily true either. If the stock's in a downtrend, I would say the odds are against you that it's going to just suddenly turn around, right? The odds are rarely 50-50, even though people think they are. But to sort of chalk it up to like, it's all random. Okay. Well, that's twofold. A, it means your success is not your own. So if you're successful in the market, you're not really successful. You're just lucky gambler. Okay. And then B, if you're a failure in the market, you're not really a failure. You're just an unlucky gambler. It's not really because you did something wrong. It's because the market is rigged. you know? First of all, if you gamble, you've made a choice. In real life, if you gamble, right? You made a choice to walk in the door, buy the scratch lotto ticket or whatever you're doing, okay? Or walk in the door and play the craps table or whatever. You know what I mean? Like, you've made a decision to put your money on the line. So first of all, it's not random. It's not a random act. You had to instigate the act. So A, there's always the responsibility of, I made the choice to put the money in the market in the first place. If you genuinely think that it's 100% random and you put the money in the market and you think it's all just gambling, then frankly, you know what to expect, which is that you could frankly just lose money. There should be zero frustration on your part because you've already made the choice, knowing well that apparently it's random, that you have no impact over the, what choices you make after that, what happens to it after that. You still made the initial choice to throw your money out there. So there's a fella in our Discord group who's said that his trading plan is to continuously trade weeklies because eventually he'll be right. Well, he already made the choice. So why is he upset then that every week when the price doesn't move? I don't know. It doesn't make any sense to me. You should not be upset. You're already making the choice. You apparently think it's all random. Not only that, but he's kind of pessimistic. So he's always thinking that the price is going to go down. And I'm like, so basically you think the price is going to go down, but you're still betting to the upside. You're making two choices there. A, you think it's random. B, you kind of also think it's going to go down. And then you're still making a choice to put the money in. So to hear somebody come back and then say, well, it's all random, it's all rigged, it's like you're trying to absolve yourself of the responsibility of the choice that you made. Like, I'm not responsible for my choices to put money into the market. Okay, well, that's not what I'm about here, right? Like, if I thought that was the way the market really worked, I would not invest in the market, period. You can't invest in something like this outside of a gambling mindset. You can't invest in something like this unless you believe that the true valuation of companies comes to light over time, and that good companies that make good profits will prosper over time, right? And then the chart reinforces that idea, that the technical data that comes with that reinforces that idea. And that sometimes the technical data may not look right at the naked eye, which is why I love Wyckoff in terms of like operative mindset, because sometimes it looks wrong because there's other people in this trade that are doing things. The players in the game. There's people in this trade that are doing things that make it look nasty or unappealing at times because they want to achieve a certain outcome. And that's possible, right? That's totally true. You see the same in poker, right? Where people are gambling and they're bluffing and they're making it look like they have a great hand or they look like they have a bad hand in order to deceive the other people into throwing their money the wrong way. That's not amateurs playing. Those are professionals who understand the psychology of the game, right? And so to me, it's like, I don't really understand the need to. It seems like every other few days on, when I stream and stuff, that there's always somebody out there to just say, well, it's all gambling. It's all random. If that's the case, why are you doing it? Like, don't invest in it. Are you a gambler? If you're not a gambler, why are you in the market? If you think it's all gambling, but you don't want to gamble, don't trade the market. But at the end of the day, I can't help but think it's a little bit of an excuse. It's a way to kind of have a safety net so that if you don't do something right, you can kind of blame the market, blame the man, Hey, it happens, man. Sometimes they rug pull. Sometimes you get head fakes. Sometimes it doesn't look fair. I get it. But it's not random. It's intentional, and it's being driven by institutions who have way more money than you and I do. And that's the difference between saying, well, it's just some random act of rug pulling versus there must have been a motive here, right? And we're going to just be curious, which is kind of the name of my title, and figure out what it is, right? So when I look at this big picture, I'm kind of just thinking like, all right, what's the operative trying to do? What's the operator trying to do here? What would be the goal? It's always the mindset I feel as a channel should have. And then also that the market is bigger than a couple plays. It's bigger than one or two plays. There's tons of plays out, thousands of plays out there every single day, right? If the goal is just to see like, when is my AMC going to pay off? I do think, yeah, generally this is probably why viewership spikes early in the day, why we get a classic distribution on my viewership every day, because there's typically like an upthrust where people are like, oh, I'm going to watch and see what happens with AMC. All right, he's done with that. Oh, he's talking about GME. All right, he's done with that, and I'm done. He's not talking about anything I want to hear anymore. It's like, well, yep. But sustainably, like, I don't think that AMC and GME are going to drive the economy of the stock market, for a lot of people forever. And I personally don't want to be on that train forever, man. Like, I want to be able to get the money that I want from this. Maybe continue to trade it, maybe not, but at least from that point forward, like, have, options. What can I do with my money? It's not always AMC or GME. Like, that's not the choice. There's thousands and thousands of things. So I'm talking about like IWM a little bit, because I'm like, man, this has been a pretty easy one to trade, and massive swings here. Potential for a lot of money. We look at other stuff too, because that other stuff may have great potential. WTO, for example, did a little fake out down. It looks like it may be coming back above 50. I said that's kind of what it needs to do. We'll see. But that could be a potentially really strong move. You don't have to trade it. That's not the reason I'm bringing it up. And I can't even tell you to trade something or not trade something. That's not my... That's not my job either. I'm basically like an interactive chartist. Click the wrong thing. I'm like reading out levels. I'm telling you what my expectations are, etc., etc. S&P 500. So let's just kind of keep it simple right now. So there's a rising triangle, right? You see it's narrowing into this top around 565, and then it broke out. Now it's rising above it. It's did like a double up thrust, but you have a little bit of a problem here, which is that at least on the hourly, we're kind of noticing that there's a little bit of a divergence. It's the S&P 500. Does a divergence always mean it's going to turn down? No. Know your stock, or in this case, your ETF. Sometimes a divergence is looks like it's going to obviously, you think, oh, it's going to turn down, right? Not the case for the ETFs. Sometimes they are very telling, but sometimes they're just not. Like, here's an example of one that would have been completely and totally misleading back in May of 2024. It looked like it's going to drop. It's just the middle of like an S-curve, basically. It's kind of a shallow S-curve, but it's an S-curve. The RSI is like a reset. This is one of the more inconsistent things about ETFs that I really dislike. I wish it were not the case, because unfortunately it's kind of a toss-up, and I don't like that. And you guys are like, well, you said it wasn't random. Well, no, it's not. If this were any other kind of stock and I looked at a divergence of this scale, I'd have in mind that it could be an S-curve, but I'd also be thinking in my brain, like, what's more probable? ETFs, I don't know if it's because of the nature of them, especially SPY, it tends to be overbought quite a long time. It doesn't like to be oversold, so there's a big difference. It doesn't spend as much time oversold as it does overbought. It's a bullish ETF. So it's important to note that, like, yes, I'm seeing a divergence here, but it also kind of just looks like a flag at the same time on RSI. So there's two possibilities. One is obviously this is a divergence and then it just drops, in which case I would probably treat this like a mild head and shoulder, like it's on a rise. It's not the best. It's not like, again, I'm not trying to like rewrite the book here. It's just very mild, simple kind of stuff. In order for that to break down, it'd have to come back and gap fill and then slide back through like 569, in which case then I'd be looking at roughly like a 50% of this guy. It's not that far down, so you might expect there to be a pullback, and if it makes sense, then it's even more logical. And in this case, that pullback roughly equals maybe 566. We go back and look, does 566 make sense? Sure it does. This is kind of the whip around level. So here's what I would say, okay? I would say that bears probably have that in mind. Not only that, but on the hourly here, that's the 180. That would be right up underneath here as well. So a clear and evident bearish outcome would be this move right here. It's sensible. It obeys a lot of the technical outcomes. It also would happen to probably intersect a key level of support and resistance right here, right? Definitely a support level. And then it would probably be a back test, again, against this hourly. That's in the case of like, oh, it's bearish, it's going to kind of distribute right now. Is that possible? Sure. It's not impossible. Right now, I'd say on RSI, on the hourly, I'm going to try to expand this a little bit. It's hard to say with this kind of stuff because RSI charting is not exactly like perfect. And frankly, you can be kind of right and kind of wrong. When you're looking at an RSI, it's not like a price action, right? They obviously are different. This is not like a big, it kind of is a wedge, I guess, here at the top. But that's about the only place it appears. It doesn't continue from September 17th. So right now, this looks a little bit like a wedge, right? So we're going to keep that as well in our minds as we do this quick analysis on SPY. It looks a little like a head fake on RSI, but it's holding right now above that moving average, just right at the same spot it's holding that creek. So there seems to be a bit of contention here, maybe a potential that this rises again. And then in order for this to continue, you'd have to make a higher high, but more than that, you'd have to see it kind of break above, if it holds support here, it'd have to break above probably 575, although we might have a slightly different view of that because it could take longer to get there. But right around that level, it'd have to break out. So right now we've got kind of a 50-50 swing up and down, meaning it's sitting kind of in the middle of this sprawl. That also makes sense from a bearish and bullish mindset, that there would always be kind of a yin to the yang type deal. I'm seeing this as like a 50-50 swing as well, from the gap top here to the gap to the bottom. So again, I think bears have a really strong case to try to come back down, but they'd have to dump it beneath the gap, the creek, the gap, and this uptrend. To the upside, then you're kind of looking at this like bigger picture saying, well, where the heck is it going to go, right? We have a continuous, we'll call it a creek because I'm not really sure if this is much of a trend. It was a trend for a bit. I'd say it's a trend that broke. We could see that as a possibility. That's this upper yellow line. We got a smaller version of that. This could be one of those situations where we're starting to iterate like these kind of moves up. Maybe at some point in the future, we get up to like 600 or 700 and then break down. We've talked about 2025 quite a bit. And the potential is that you get up high early 2025, and then I think it was summer was where you'd have like a backup. That seemed to come up on a lot of charts. Like that summer would be kind of a down and then a rebound period. So you'd have like a wave up and then back down by summer next year over the next 6 months. So I'm seeing some of that continuity here where there seems to be a drive to go up to basically 690 by early 2025. There's a number of things that you could look at then in terms of like an S-curve here, but I think the simplest thing would be to just kind of look at a 50-50 around this potential top from the recent bottom.
This is just waveform basics 101. They tend to be anchored on a midpoint. So if you have like an S curve or a big wave, look for the midpoint, right? That just helps you to know where the top and bottom are. So I'd say there's a decent chance if it can get above this 576 that you could see it push pretty high. There is, however, and this is important, another marker, and this is where we start looking at even more macro consideration. I'm going to go to the daily, and that's the middle line here. Now, this has been one of the truest kind of central points on this massive uptrend that lasted for like decades here. Well, at least 1 decade. Yeah, 10 years, right? And this is where we've recaptured recently. We recaptured that trend. So pushing up into that middle is pretty important. Looking backwards, there's not been a lot of times, except for in major drops, like right here maybe, or here, or here, or here. There's not been a lot of times where we've just pushed up past it and gone through it. I don't see that very often. Even back here when it recaptured and pushed up, it dropped again. Recaptured here, it didn't just go right through it. So it would be a little silly to think that it probably just busts right through there. But I do think that it's possible if it gets in there, that could be a sign of a much larger consolidation forming. So if we can get up to 590s, maybe this holds, right? That could be like the break. It doesn't really matter at that point. We'd have to come back and look at it anyways. I think it's possible it holds here, and then this kind of builds out longer term, maybe till November. That's what it looks like to me. That seems reasonable to me. Like if it goes to the upside and it can hold above 580, this would be a longer term channel. And then the only real thing I could see going down beyond what we've already talked about is just dropping through here back to this low. I don't see a lot of reason for that except for maybe to do a back test on that creek. If this is an SOS. Yeah, maybe. It looks like it already did it though, so yeah, I think it did. Maybe over here, I don't know. You know, this is like October 3rd. There's that second and third again. So if it came down, perhaps you could see that. That's pretty much it. So you're looking at potentially breaking back up if it comes up again to 578. And then if it can hold the support rather and break back to the upside. I'm not going to do local breakouts. You can do that yourself. Just look at small time frames and see where the trends are, see where they break out, meaning like the little downtrend here. The gap itself doesn't have to fill necessarily. It could come as low as filling the gap without breaking down, but it does break the creek in doing that. So it'd have to rebound back above 571 in order to continue, and that's that. So it's kind of straightforward. I'm not seeing a lot of confusion here in terms of the market. I'm seeing like, okay, potentially, yeah, this is like a double up thrust that could drop back low as I think it could go maybe 560s. But if it can continue, I don't see why it wouldn't go ahead and push at least up to 580 and then potentially all the way up to 591. So, which again might seem like a huge move. It's $20 away. It's a big move, but I wouldn't trade that unless it came above 576 from where I stand right now. That's just, again, confirmation. So what's be curious, not judgmental? What does that mean? Have you ever seen that show Ted Lasso? Well, he quotes Walt Whitman, but it's kind of debated whether or not Walt Whitman actually said that. He didn't really say it like that. He said something else, but Walt Whitman didn't actually say that. But it's kind of like it's close enough, anyways, to something that Walt Whitman once said. But Ted Lasso quotes it in the first season when he's talking about how bullies would underestimate him because they were judgmental, and they would assume that he's bad at things. They would assume that he has low potential and he wasn't good at things. So they would take a look at him and they would think that he's inadequate. And really, like, their judgment had nothing to do with his potential at all, because he's the one that has to do with his own potential. It's a really great scene because there's this guy who he challenges to like darts or something. And the guy, he's this really uptight British guy. And it's not relevant that he's British, except that he just is, because he's in England, coaching like a soccer league, basically a football league, and he's actually like a amateur American football coach. But everybody underestimates him because he's got this kind of hillbilly accent, and they assume he's an idiot and he doesn't know what he's doing, because he's always really positive. But he's actually really, really intelligent. And he's really good at his job. And the guy, he challenges him to a game of darts. Instead of the guy asking him, like, and he says this, he's like, instead of asking me, are you good at darts, Ted? The guy just immediately assumes he's bad at them and that he's an idiot, and challenges him to a game of darts, and he's actually really good at darts. And he quotes it just to say that, like, bullies in the world underestimate people all the time. And instead of asking the question, like in the show, he says, instead of asking him, hey, are you good at darts? Instead, the guy just immediately assumes he's not and thinks he's an idiot, and backs himself into a corner, basically. And then, spoiler alert, Ted Lasso wins the dart game, hands down, pretty easily. And it was meant to be like a way of affirming this idea that, like, people consistently underestimate this character because he's happy and he's kind of perceived as kind of like this American rednecky kind of guy, but he's not actually stupid. And they think he is. And he takes that to his advantage. And what I was thinking about with the market today was this idea that there's a lot of people that were immediately very responsive to this, and they get really angry, and they immediately start kind of going out and becoming really judgmental of everything. Like, they judge the market, they judge the operators, they judge Adam Aaron, they look at YouTubers and they think that YouTubers are to blame or whatever, And when you look at something like this, you want to make a judgment call, and you want to be immediately the first person to answer the question and to, like, have the right answer. And then you use that. A lot of people use that and they weaponize it, to either put people down who are wrong or to whatever. And the market is better as a place of curiosity. Like, it's better if you're a learner. It's a lot more forgiving if you treat it with curiosity instead of judgment. And it's not just judgment towards your fellow man, but also just judgment towards the institutions that be. As frustrating as it might be that they're oftentimes controlling things in a way that we don't like, curiosity is a much greater ally than judgment. And yeah. And I mean, we could go on and on about judgment and whether that's a good thing, what judgment actually should entail. Good judgment, maybe, as opposed to bad judgment. But, like, I just thought that was a really funny thought that came to my head the other day. And if you've never seen Ted Lasso, it's definitely an adult show. Don't watch it with your kids, but it's pretty good. It's pretty funny. Anyways, I'm not pitching the show to you. I'm just saying it's a good show. But it reminded me a lot, for some reason, I don't know why. I thought about that the other day when probably because I was sitting there doing my animation work I've been working on this fish animation, and it's a pain in the butt. And I was on a deadline, and the client told me that they didn't really care about the deadline. And I was like, thank gosh, because I'm not even close to being done, um, which is horrible. But I just really wanted it to be good, you know? So I was like, I really want to focus on that. And I had to take a couple days off from streaming because I was like, man, I really got to cram and get this done. And I'm still not done. I'm almost done. I'm really close. I think I'll be done in the next day or two. But I had to ask for an extension. But as I'm doing that, I'm looking at the Discord group, and it's like, I think this is what brought it to mind, was there's like, there's a certain brand of person that comes on, and it's not just one, but it's, in our group, it tends to be one or two people that just kind of like down on each other and like not happy about the price action a lot. And then you start hearing people talk crap about other people. And I'm like, man, that's not really what this is supposed to be, you know? And a curiosity would be like, well, why do you think this? You know, why do you think that this is going to happen? What evidence do you have? Can we explore this together? And that's kind of the attitude that I want to have. And then immediately I thought about that Ted Lasso moment in the show. And I was like, it is definitely at times the opposite of judgment, because so many times, like, we don't ask questions. We just judge, you know? And so I was like, you know, when I looked back at my stuff, I'm sitting here doing my animation work, like working hard and trying to provide for my family and like, and do a good job, make myself proud for what I could accomplish with something that I want to accomplish and make it good. It's not because I want to showboat. It's just because I want to feel good about it. And I'm sitting here like reading through comments every now and then, and I'm like, man, where is the curiosity? Like, it's just a lot of it's just judgment. And I was like, you know, we're funny. It's funny too, because we're basically saying that, like, it's kind of like when people were talking about earlier, is like they come on and they're like, well, there's no rhyme or reason for anything in the market. And I'm like, that's not really true. It's kind of a judgment call. And it just reminded me of how, like, for some reason, some folks think that it's all random, but I look back, and it's not to toot my own horn. It was just to say that, like, the market's not really as random as it seems. If a guy who's from basically podunk nowhere can sit there and do an analysis on it and make determinations about price action, and then those determinations come to fruition, if they do it once, you might say, well, that's just dumb luck. You know, a broken clock can strike twice, you know, twice a day or whatever that silly nonsense is. And I'm like, yeah, sure. But that's not really been the case. Like, I found like 7 or 8 screenshots within the last month, and they are all like predictive of localized price action. I don't think it's because I'm just randomly getting it right. I think it's because, like, we're using a consistent pattern of analysis that produces decent results. So we're right more often than we're not. And even if we're not right, we have the backdrop to say this is what happens if it doesn't go our way in terms of like preference or bias. And that to me comes from and stems from curiosity. And I thought it was really interesting how, like, as soon as like I left that space for like a minute and left it to its own devices, it starts devolving into judgment. Like, and I think social groups, they're supposed to be, even in that particular setting, it's supposed to be professional TA. Like, that's all I try to talk about on there is TA, period. That's it. That's what it's for. It's for work only, right? I mean it that way, and I intend it that way. But at the same time, it's like as soon as I exit that space, there's always those kind of people that creep in that are just like immediately, like, we start going to the judgment mentality of like doom and gloom and all this stuff. We lose curiosity. We stop seeking to grow and learn. And technical analysis, when it's done corporately, like as a group, should be about curiosity, about exploring differences. So I posted all this stuff and I said, hey man, look, it was basically in response to this judgment that was coming out. Like, look, TA is not random. Like, we've had months of difficult price action, but it's been fairly predictable. Like, week to week, it's been very, very, very predictable, guys. It just has been. You might not think it has been, but I've got timestamps and screenshots and like streams to prove that we've like talked about these possibilities and then they happen. And you're like, it's pretty much exactly like what we were expecting, you know? But for some reason, there's still folks out there that are like, it's all random. Like, it's never going to be, you know, it's just going to be crap all the time. And I'm like, that's not what this is about. So I posted this, and I guess it seemed a little bit self-serving, perhaps. And maybe that was an unfortunate byproduct of doing that, because it probably seemed like I was just trying to like prop myself up. But it was more just to say like, it's predictable. You know what I mean? Like, that's what I was trying to get across. Like, the price action doesn't always do what you want, but it's definitely not something that's beyond prediction. And I then encouraged everyone in the Discord group, hey, post your thoughts. Like, this is a good time while I'm doing all this animation work and I'm not streaming. This is a good time to post your thoughts about the TA. And immediately, like, a couple people posted their thoughts. And I'm like, thank goodness, you know, like, there's people out there who are willing to think for themselves and to try to do it. And disagree with me or agree with me, it doesn't matter, right? They're willing to try. And I think that's great. So that was the reason I posted what I posted today. I think we swing from like one to the other pretty easily in our economy, social economy, and it'd be better for us. It doesn't mean that you can't have judgment. It doesn't mean that you can't have good judgment, or you can't think things are right or wrong, or that you can't have a standard or something. I mean, there's all kinds of weird things you could try to like twist the words around to mean. That's not what I'm saying. I'm saying that sometimes the best thing to do is just to ask questions and to look for answers, and not assume that you already know what's going to happen because you're just always right or whatever. And that's kind of how I feel about AMC, you know, going into the day. It's like, yeah, this looked kind of crappy, but it's not. Like, we'd already talked about this. We already had this as one of our curiosities. Like, what happens if it does this? This is what we think happens. So is it still on that path? Yeah, it is. And then we look at the creeks and we look at the overall kind of pressure here, and it's like, sure, like, it's built for it. So it's about what happens when you get there. Is it continuously doing what you think may happen, or can you look at it from a different angle? And that's the way I want to approach the market. And that's why when someone says, hey, you want to look at this or that, I'm like, sure, like, let's look at this, let's look at that, you know? So on that note, I'm gonna look at Doge. Dave was asking me about it. I have invested quite a bit in Dogecoin after doing the initial analysis because, oh yeah, because it busted out back here from a local creek. And this is a little ways back, but when it broke out here and then it advanced again, it's been basically making laps up through the month of September. And to me, it looked like a really positive possible breakout. And this is like, on the macro scale, this is one that could yield, I hate to say like massive results as if it has to, but it's definitely on the mind. I'm sitting here looking at it right now too, and I'm like, yeah. I mean, it looks like it's making the appropriate waves, you know, and the next wave should be the next wave up. I mean, it seems a little silly to think it goes from 11 cents to $1.48, but I'm sure people thought the same thing when it was 3 cents and it rose to like 60 cents. So I feel like this is a really good setup on Doge. It's just pretty much the same thing that Doge does every single time before it breaks out. It lays up on the major creek. It does a creek jump. Usually it flags for a while. I mean, some of these flags this is a really long one. 2016, 2017. This one's a little shorter, maybe only like 4 months. This has been quite a long one. It goes from March till now. So it's not like a competition or anything, but it's just looking at them in previous iterations of the same kind of concept. There's really no reason to look at this and think that this is any more complicated than it is. It's very simple, in my opinion. And then these parallels have indicated where it kind of reaches the top. And that's where it indicates that by February 2026, there's that number again, that you potentially could be up pretty high. Now, I think that based on that alone, it may not be enough to sort of trade this. One of the things that I'm curious about is whether we need to come back and check this trend, which we haven't actually hit yet. So one thing that maybe looks obvious here is it kind of looks like it just takes off and goes to the moon. But that may not be the case. You may have a period maybe where it goes up and then it still needs to come back down. And this happened back here. It took a few months. This was in 2020 of November, like 2 months. This one never does that because, again, it hits this outer trend. This interacts with that outer trend. So I'm curious if we need to hit that because we haven't tested it yet. And I'm not going to change my line because I think my line's right. So one of the things I'm kind of curious about is whether we do hit this outer trend. It could very well happen that this needs to push up. Probably going to advance back towards this top here. As you can see, like back in this one, this advanced back towards that top again. It's like the ceiling. And I think that's likely where it is here. So I think it advances back towards 14 cents. And I've got that on the chart already where it kind of hits that top and then potentially sinks again. My only real question is, could it be a situation, I think it's possible, is it a situation where maybe this comes back down? Again, I know it could be even lower, but it may just be more sideways, you know, and I don't know. I don't know the answer to this. It's hard to say, you know, but I think it's very possible that this could be a situation where it basically goes all the way back down to hit this trend before taking off. And I think that's just a debatable point. Maybe you think it doesn't need to. I don't know. I suspect it's important enough that it probably will. So I have this as kind of just taking off, but in reality, it may be a little more long-winded, you know, coming back down. Still, nevertheless, for the time being, you're talking about an area between roughly like 15 cents and about 10 cents, which is a really good buy if you think this is going to advance. So this whole region to me is like a good buy zone. Like I don't see it as negative. The only thing I could see as negative is it breaks down. And right now I just jumped the creek. So reasonably, you could probably look at that and just assume there's going to be some kind of retracement. Again, just kind of reinforcing the idea that maybe this goes back up to around this level. There's the golden retracement right there at like 15 or 16 cents. I think it's very likely it hits 15 or 16 cents, breaks out, hits 15, 16 cents, then comes back down, and then basically we have a retracement the other way. And again, it's like, look at the reverse of that. Then the other side of that coin, no pun intended, is 10 cents again. I mean, it's almost like too obvious. It makes me kind of wonder, but that's the 618 the other way. So like, totally possible we get a big wave here that heads up maybe in October to 15 cents. From like 11 cents, and then potentially, no guarantees, but potentially this comes back down to 10 cents again, retraces back down, and this time it hits the edge of this creek, and then it rallies probably pretty big in January. And after that point in time, it's anybody's guess. These are this is difficult because it definitely looks a lot like GME and AMC and stuff. So a lot of people are going to probably say, well, I think it's going to immediately go back up. like AMC and GME. I don't know. Okay. I don't know. I will say that in the past, when this is broken out, and you can kind of see that this is sort of like the main. I put these wave crosses here on Dogecoin. These are just like the main middle wave cross. It's stayed consistently the same. So it's important to note this particular line has consistently been that wave cross in the middle. That does seem to have some kind of interaction with it in the midst of the center. So in this case, it literally comes and like wraps back around that when it gets to the top. In this one, it's a little different, but it is there. You can see the whip around of the top, and you can see how it intersects with where that is. It's almost a triangulation method of like, that's where the wave should come back up, right? So when I look at that, I'm like, yeah, you could use it as almost a linear kind of triangulation method of like, this is exactly where it's going to hit that line. Don't know if that's the best way to do it, but you could do that. This one's like perfect. This one's a little bit early. Yeah, I mean, it's really close if you just go right from the pink line here. It goes straight over. So if we were to do the same thing right now, it would basically go back to November 2021, and you would expect to hit that pretty early, like November right here. So maybe it's a question of like whether or not does it need to come back down again. If it doesn't, then it just takes off. It goes right to that point by November. That's essentially like election time. So you could make that argument, maybe. And that looks a little more like this one perhaps. Then you would see it come back over the top like an SOS and then come back and creek test. This one doesn't really ever do that. It just kind of passes through it. There is a bit of a whip around, like 50-50 here in 2021, but it's not like what happened in 2017. So you just kind of make allowance for those as possibilities and then consider like what we've already talked about. So yeah, I think that's out of the question. So maybe both, who knows? It's kind of one of two possibilities here. So one is obviously going to be a lot less dramatic. Maybe it does both. Maybe this does come down to 10. I don't know. And it's maybe it does do the retracement, but it doesn't take that long. And then this passes up here and squeezes through November into December. And then we're just kind of asking, well, how high does it go? I don't really know. It looks like if I had to pick, I guess I would say that it looks like it might hit that same mark every time. Yeah, it did hit the same mark each time. So I mean, it could potentially come up past here quite a bit. This one did. Could squeeze up to $1.74 even, and then come back. Kind of jump again later. It's a little more in line with maybe what happened in 2018 in terms of the setup. You get the idea. So there may be an expectation that this comes back down pretty far and then breaks out again summer of 2025. This is a little more in line with what we were thinking on the other chart, which is you get a pump into January and then come back down in May. It seems to be the theme here is that you get a pump up end of the year and then you basically come back summer, which I guess happened again in 2021 with that big breakout. And then you maybe break out again in summer. And in this case, perhaps it heads back up, hits that mark. It's really hard to tell how far it could go, but see, some of these, it's like, it definitely intersects it, but it intersects it and then it does it again later. This one, it was like right on the money. This one's after the fact. So this could be like a secondary motion like that. Debatable, right? Nevertheless, my point would be like, that's a ridiculously huge move. Right. So anywhere between 10 cents, we'll just say average of 12 cents. That's an 11,000% move, which is kind of silly. It almost doesn't make sense to me. What if it's not that booksy? Well, here's the thing. Even in the midst of distribution, where's the volume? Why is that doing that? That's weird. Even in the midst of distribution, I'm not sure why the volume's not showing up. But even in the midst of distribution, it would still come back up to the top. So like one of the things that may bother some folks is like, this is only assuming you go up. But what if you go back down? Well, worst case is that you break down here. So you'd have two levels of potential breakdown. I guess there's two levels here. One is 15, one is 23 cents. If for whatever reason you were going to break down and slump, you would do it right here and then you drive the price low. Okay? So again, you'd have this kind of like zone of like possible wreckage here. And once you pass that zone, you're not really in any danger anymore. You could probably assume that you're going to keep going. Because if this did reject, sure, you could head low. And that could be a bigger macro rejection, so to speak. I would imagine it would be pretty straightforward. Like this particular creek right here, simple enough. It's just two tops. It's raised right there. This is probably, again, more likely where you'd have some kind of distribution. So somewhere around maybe 17 cents. I don't think you'd necessarily push all the way back up to the top just to distribute. But yeah, so like that's kind of the greatest danger locally. And then beyond that, you're not really looking at anything super dangerous until all the way back at the top again. Like genuinely, you probably would not see anything hyper distributive even possible until you got up to here. So it's a bit strange to me because it's almost like too good to be true, but it does seem like from here you'd have at least a move up to 18 to 20 cents before you'd be in any real danger of real serious danger of like distribution. Not saying it couldn't happen. I just think it would be like, again, kind of nitpicking here, but I'm saying that it's probable that it goes back up to this top. And then beyond that, yeah, you could have some possible distribution elements above that that could drive you back down. That's not out of the question. So we're not going to be one-sided about it. And then beyond that, I just think it's such a big schematic that you don't really see a lot until maybe 37 cents up to 67 cents. And that's kind of it. So, you know, worst case scenario here, I guess, would be to assume that it's going to go all the way up and then it goes to like 72 cents and maybe comes back down. Maybe this is where you finally get that check. And for whatever reason, it's kind of like what happened before, but it's a little different because it's slower and it builds out really slow by coming back down. Long term, people would look at that and say it's a giant cup and handle, whatever, you know. I don't particularly think either of those is bad, though. I think both could be very, very good potentially long term. It just depends. So this would be a potential place where you could maybe see a distribution happen as well. So I don't want to say it's like no-brainer. It's not a no-brainer, but it is something that I would look at and consider very thoughtfully as a potentially really good play because right now it's at a historic low. It just had a really good low, I mean. It had two breakouts. If it holds this breakout and it can advance back above 20 cents or so, it should be just off to the races. Yeah. I'm not saying to dump your... dump your money into it, but anyways, does that make sense? So when I look at this big picture, I'm thinking about the overall levels of support and resistance. And I think this is a pretty decent place. And then you know that if it broke back beneath like 10 cents or something, it's not necessarily positive because you just leapt over a creek. You don't want to drop back down through it. Straightforward. Okay, you guys can do your own TA on that kind of stuff. You don't need me to tell you every little thing, hopefully. But I think this is a simple enough to read setup, pretty straightforward. So I think it's a good trade. I bought a ton of Doge back here at like 10 cents. So as much as I could afford anyways at that time. So I'm definitely not anti-crypto, but I think that the setup was good enough that it begged my attention to pay attention to it. When we looked at it, I was like, oh yeah, this is pretty clean, easy to understand. So I like that kind of stuff when it's easy to understand. How is what possible? TA? Or how is it possible that they control price action? Controlling price actions they're both easy to answer questions, but controlling price actions is easy when you got a lot of money. Regardless of whether you believe in their algorithmic trading is just the nature of the market nowadays. It's nothing new about that. Their control of the market's easy because of supply and demand. I don't think people recognize what that means. I think they think that supply and demand does not exist, and that's what I always hear. It's the great argument against TA because TA assumes that supply and demand exists. And without it, you don't really have technical analysis. But then again, it's kind of like, what do you call a level of support that's continually retested and tested? Like, you can't have supports and resistances without supply and demand and TA. So it's sort of a chicken and the egg kind of thing where it doesn't really make sense without it. And with it, a lot of people think it doesn't make sense either because they're like, well, if supply and demand exists, this shouldn't happen or that shouldn't happen. So nowadays, you have the ability to hide supply and demand from the market. So one of the things that makes it challenging is that you can hide your positions. And if you think about it, this has always been the case because it's not like you had to know all the time. There weren't regulations in the market all the time that said so-and-so had to disclose and share their positions. A lot of those things are newer. You know, we talk about filings. They're newer filings and things like that. We didn't always have what we call like a dark pool, right? We may have had behind the scenes trades, but now we have these specific areas that we call dark pools, right? Where they're matching up trades. Well, operators, even back in Richard Wyckoff's time, were heavily known for their ability to disguise their trades and to not really tell you what their cost average is. It was to their benefit to not let people know what they had. And it still is. So, first of all, I would just say that the idea that supply and demand don't exist, I personally find that to be a bit silly. But I think that when we see stuff in price action, we're often seeing as kind of disguised supply and demand. Like we see glimpses of the reality every now and then, but it's not like all or nothing, right? It's kind of like you're given enough they're giving you enough of a leash to kind of be able to see what's around the fence. And they want to do that because they want to mislead people at different times. They're giving you as much as they want to in order to kind of tell you what the narrative might be, right? But oftentimes, institutions are betrayed by volume. They're betrayed by certain things. And they can control a lot of stuff to a certain degree because of the amount of money they have. And that's the other thing is like, when you have 30 million shares and somebody comes in and retail comes in and buys 1 million shares, well, look, you may think that that 1 million shares should push the market up. But if you're daily trading like 10 to 30 million shares, obviously there's a lot of back and forth happening. And if your institution doesn't have to kind of, and your market makers don't have to kind of reveal everything, then it's pretty easy to kind of cover all that stuff. And frankly, I think a lot of it also comes to this idea that like people think that there is no supply. Like they think that nobody's selling. And that's just not true. We already know that's not true. And it's not just about naked shorts and all this stuff. That is a thing. That, again, disguises the selling, right? It disguises supply. You don't see it all. But it also disguises demand because the demand gets absorbed, right? When I talk about things like effort, that's where you really see supply and demand build out. So like the amount of volume within a certain move can be very incongruent. You might have one 10% move that's got 1 million volume, and you might have another 10% move that has 10 million volume. That's supply and demand right there. They're showing you that it's taking a lot more effort to push the stock up when there's 10 million because there's clearly more sellers. Now, could that be that an institution is absorbing all of that so it doesn't break a certain level? Yeah. Are they meeting it? Are they meeting sell walls with a particular amount of buying volume in order to not break certain levels? Yeah. So then what controls the price movement? How do we eventually break out? Well, eventually your demand has to outweigh your supply, and that's what eventually drives the price up, and vice versa. So these concepts are like not just ethereal concepts. It's like if I have enough money that I can prevent something from happening, then that's what I'm going to do if I'm not done trading it. So we talk about Wyckoff, we talk about range exhaustion, we talk about satisfying ranges, we talk about trading ranges that, and I've talked about this quite a bit, like this middle has been so heavily traded because there's obviously a lot of people willing to trade it. This isn't coming out of nowhere. Like a lot of people probably think that this is valuable at $5. And whether or not you think that it's made up supply or not, it doesn't really matter. Selling is selling. And somebody's meeting that to the point where you're going sideways for 4 months, meeting that buying. If your operator is ultimately bullish, then we know that what the aim is. If your operator is ultimately a short, we know what the aim is. And that's accumulation to drive the price up or down out of this range, which is the whole point of Wyckoff's study, which is to determine like whether or not you think it's a bull or a bear operator within a range. That's it. It isn't to look at every single move with absolute scrutiny, although there are moves that can tell you a lot. It's really just to look at the big picture and say, if this is bullish, what's the goal here? What would they be doing in order to shake out weak hands, make people think it's going to go, and then cause them to despair and sell, in order to gain more sellers? And we saw the same thing with GME. They kept driving the price back up to just dump it down and dump it down. They're looking for sellers. They're working their way up, getting the weak hands out, buying up the stock, and then they drop it when the sellers are picking up steam, right? And the idea that like that shouldn't be happening doesn't really make sense to me, because I'm like, well, who's the arbiter here? Are you the one that's looking at all of the orders and you're deciding what should and shouldn't happen, right? And that's why we look at stuff like signs of weakness and we say, all right, there's a sign of weakness. Like clearly there's a lot of sellers still in this area, and that could be a sign of weakness, which indicate that you might come down later. Like I don't say those things willy-nilly. I say it because I think supply and demand exists and that the chart does demonstrate when there's weakness and strength. When it dumps up above this 520 and it drove down beneath, what was my response? Head fake. That's not good, right? How can you possibly do TA if you don't believe that supply and demand exists? You wouldn't be able to understand and interpret that at all. Like, it just doesn't make sense. And then chicken and the egg. You can't have head fakes without control. You can't have head fakes without TA. It doesn't make any sense. There is no such thing as technical analysis without an operator in the play. I know it sounds really weird, but you have to remember the operator is not like a single entity. It's like a bunch of institutions. It's huge, big money. You're talking about not the people who are just buying and holding, but the people who are actively trading the stock in large quantities are the ones that are largely driving the price action. And it's the term is composite operator. It used to be called composite man, but I guess they decided that was too gender specific or something. And I like the term operator anyways because it's more descriptive, where like composite man just sounds weird. But the idea behind the composite man was that it was like if you treat all the institutions as a single entity, then it's easier to understand than trying to determine what 12 different institutions are trying to do. You can just think about it as like a single opponent who's driving the price. Like, what is the primary action? Nowadays, people think about it and they think, oh, it's this composite algorithm. And it is. But ultimately, it's driven by motive. It's still got behavior because a human programmed it to have a certain behavior. They're trying to accomplish certain things. And I think the goals are largely the same, which is to, when they're marking it up, they're trying to drive out weak hands. When they're marking it down, they're trying to drive out weak hands. Well, weak to strong, strong to weak, right? When they're going to take it up, they want to shake out weak hands, put the shares in strong hands. When they want to take it back down, they want to take those shares and distribute them, that's where the term comes from, back to weak hands because they don't want to hold those anymore. Accumulating shares versus distributing shares. And that's it. I don't think there's anything else to it. And that ultimately it addresses supply and demand on the whole. And you can't possibly have technical analysis and repeated patterns of behavior unless you have consistency in terms of supply and demand and how the market trades certain situations. It is self-fulfilling prophecy, yeah. That's why I like Bolkowski, because he doesn't look at it like it has to be an all or nothing thing. He doesn't look like a wedge and say the wedge always does this. It's black and white. No. Go read Bolkowski's stuff on pattern analysis. He does an absurd number of trades per pattern, and he tells you, here's what the percentage likelihood is that it hits this or this. Here's the percentage that it hits this or this if it breaks down. Here's the percentage this and this if it breaks up. Here's the average percentage that it climbs. Here's what needs to happen in order for that to happen. And all of this is based on like 700 perfect trades. 700 or something ridiculous. Some of them are up in the thousands at this point. He's not doing statistical analysis based on patterns, which is pattern analysis, right? He's not doing TA based on pattern analysis that's just like a wedge breaks up if it's doing this. It's like, no, like there's all kinds of factors that play into it. But here's the statistical likelihood it does this or this or this. It would not be possible for retail to manufacture that kind of price movement in a more naturalistic way, which is part of the reason why penny stocks are like the Wild West of trading. Because largely penny stocks are either being shorted to death by a few short institutions that are driving it down or driving it through bankruptcy or whatever, or they have no involvement in institutions at all. When there's no institutional involvement, there are no patterns in the chart. It almost doesn't make sense half the time. Go look at a weird penny stock and tell me I'm wrong. Like a long-standing penny stock is usually just kind of a garbage of upthrusts and drops and upthrusts and drops. It's often like those pharmaceuticals are just completely news dependent. And frankly, you got manipulators on like stock twits telling people to buy stuff and pump it up. I mean, not a huge fan of the movie, but you can go look at Wolf of Wall Street, and what they did basically was pump and dump schemes. I mean, essentially. but there's no like one computer controlling every single thing. When you have an operator, nowadays they have these quantum computers, which I don't want to call it artificial intelligence because that makes it sound like they're making decisions on their own. And I don't think that's the way a lot of these computers are programmed. They're programmed to achieve certain goals and ends. But if they were perfect, then institutions would never lose money, and that's not the case. And one of the things I always think about is like, the whole big deal with the GameStop saga was that, there was a couple institutions, but one in particular that got really screwed because they bet the wrong way. And it doesn't predate algorithmic trading. It's just that the nature of it was unprotected, right? The idea that all your operators are on one side or the other is not true. And this is another thing that kind of gives me solace because a lot of people think that it's all operators versus retail. No, it's dog eat dog, man. They don't mind if their competition flunks out most of the time. Now, are some of those guys, real friendly with each other? Yeah. Should they be? No. Are some of them bailing each other out? Yes. Is that market collusion? I don't know. Do we have conflicts of interest when we talk about market makers versus hedge funds? Yeah. There's plenty of things that are wrong with the market, but one thing that's not true is they're not all on the same side. And at any given point in AMC, we've always had institutions that were short and institutions that were long. Now, right now, it just so happens that they're heavily stacked to the long side. So what do you think they're trying to do? Well, I'll tell you right now, your alpha dog isn't going to like the idea that it's sharing space with a bunch of other institutions. And if they can shake out retail, that's great. But if they can shake out a few of those smaller buy-ins from hedge funds, these little hedge funds that you've never heard of, if they can shake out some of those folks, even better. The emu doesn't care who it takes its shares from. It just wants shares. So if it can find sellers, it finds sellers. And you better believe it that a lot of these institutions have stop losses that are being triggered on some of these moves. It's not all retail. It's not. I think primarily the goal is to manipulate fear and cause retail to sell, yes. In a buy-in, I should say. In an accumulation. It's distinct. But it's not all or nothing. There's institutions here that are short, and there's some that are long. There's some that are probably selling off because it's going too low. We already know that most of them, when they bought in, was around the 15th, is at least when they posted, and then some later on. Their averages are probably like 5, which again is probably a big part of the reason why this has been slowly wrapping up around 5. And majority of those 13F filings were back here, but there's still new ones coming in every day. I wouldn't doubt it if some of them got out here when it pumped up to 574. A lot of them probably sold off down here. It's a massive move to instigate fear. And then I think in addition, you've got probably some that are selling off now that see this as like negative, That's not, so like their computer programs aren't like black and white. They're not all like, we're all going to go up together. Yay. No. You have an alpha operator who I call the emu because it sounds to me like a greedy big bird and that's stealing all the food. And then you've got the others who are following along and they'll get burned if they're going the wrong way. They will. That one company that's got like 200, 300,000 shorts, if this thing rockets, they're going to be screwed. You know what I mean? Like, there's obviously going to be institutions that get burned as well. So the goal should never be, in our minds, to do TA with this idea that like it's not manipulated. That's silly. Of course it is. But the TA is showing you what that manipulation is about. Like, that's the way I think about it. I find it to be very backwards when people say the TA doesn't work and that stocks are manipulated. And I'm like, TA only works because stocks are manipulated. I don't know if you've tried to chart a penny stock, but it's really hard. is really hard. It does work out sometimes, and it just depends on the setup and the stock, but I can't chart like a really long-standing penny stock. It's almost there's nothing to chart. You know, when institutions aren't involved, you don't have traps when there's no TA. Like, it doesn't make sense. You can't play on people's expectations when there's no expectations. So I like the statistical approach to it. I like the idea that, yeah, I mean, there are patterns that work, and when they work really well. So that's all I can say about that. It's the same question every time, and I have a very similar answer every time, but I think it's just a perception thing, you know? I think when people think of manipulation, they think evil, and and it could be, right? It just depends on what it is. And they think that manipulation means there's a lack of control on your part. But there would be a lack of control on our part anyways. As an individual trader, unless you can buy up every single share of this and you have the ability to basically buy out the company, none of us have the ability individually to drive the price of almost any stock anywhere. So it's like you never really have control anyways. The idea that there's a different person driving, I think, is offensive to people. And so they think manipulation. They're like, well, I can't control where it goes, so therefore I can't do TA. That doesn't make sense. You're not in a car blindfolded. You know what I mean? You're in a car and the driver's driving you around, and sometimes they make turns that don't make sense, but you can map it out and get an idea of which direction you're going. Are you going... You guys are like, we're going to the right. That's all I know. Yeah, good TA. North or south? Are you heading more north or more south? Why would you be doing this or that? I love the idea, and I don't know if you can do it. I should check into it someday. I love the idea that what if we charted this left to right instead of up and down? That would remove some of the emotion from it. Because I wonder, if someone's in a car and you're supposed to be going, you think, I'm going to go east. I think this is going to be a good one to go east. And the farther east that I go, the more money I'm going to make. But if it goes west, or backwards, I guess it's backwards. If it goes west, I'm going to make more money. If it goes east, I'm going to make less money. And I'm betting that it's going to go east. Well, the farther west it goes, the more you're kind of like, I'm screwed. Right? But imagine how many people would be jumping out of that trying to get into something else because they're like, well, I don't want to go west. I want to go east. And they're like, well, we don't want to go down. We want to go up, right? So you keep jumping out. So all these people on this bus that's starting to head west, all these people start jumping out of the bus, right? Those are the... I don't want to say this is always the case because sometimes it's just going west, right? But sometimes, like, that's the nature of a spring. It's like it goes the other way and people jump out. And they're like, I don't want to go that way. Okay. Well, your operator's just shaking out the weak hands. And then all of a sudden it turns around and goes east and it just does a straight shot all the way to where you want to go. And people are like, crap, I got to get back on that bus. That's the FOMO, right? And the same thing happens the other way. Oh, it starts going to the east. Great. We're going to get on. Come on, guys. Get on. Well, if it's a UT or a head fake, oh, crap. You know, kind of screwing up this analogy, but you get what I'm saying. It's like, oh, crap. Wait, it just turned around. Are we stuck on this bus now? Wait, is this bus really going west? Oh, crud. I thought this bus was going east. You know what I mean? Shoot. There's your head fake, right? It's easy to trap people when you think about things like in those terms. And that only works with supply and demand levels. Because people don't jump on the bus randomly in the market. They jump on the bus based on TA and on supply and demand levels. They jump on the bus whether or not it breaks a range or not. Which is why, we've kind of talked about this before, but like institutions don't really trade that much. They'll trade shares back and forth back and forth in a range. But they don't trade like huge amounts until the markup period. And that's kind of like, I know it sounds weird, but it's almost like you're paying the bus driver to keep going. You keep buying more and more and more shares, right? It's like, that's why you don't see a lot of quote unquote smart money buy-in until the very end of the range. Why do we have so much volume here, and not in the middle? Why is the range volume so low? And then all of a sudden, that's the reason. It's because like smart money is not buying in until it's time to go, typically. Because they know that bus is going to drive back and forth from the east to west border until it's ready to go, and they're waiting for certain signs that, yeah, it's getting ready. I've often wondered if we could flip the chart like vertically, how much that would change in our minds, the perception of the market. You know what I mean? I bet it would change a lot. That's why I talk about things like slingshots and waveforms, because it's like you can often see that direction, and then you can find the place where this is where it confirms that direction, and then you're going to come back to that path that was being taken. So yeah, I find it to be an interesting conversation, but ultimately, I think what people really want to know is like, is TA reliable? And I think it just depends on the way that you view it. If you view it as a very rigid kind of inflexible thing that probability doesn't affect, then you're probably not going to like TA very much. If you are able to look at it in terms of like probability and outcome and determining like what would an navigation of that look like, I think that's a better way to look at it. Because you can navigate if you kind of have an idea of what your bus operator might be doing. You can navigate it and you can plan for better entries, and you can have a better understanding of what it means when this happens or that happens. That's the difference between somebody thinking that the person is just randomly driving around versus, no, they're doing it for a particular reason. Like, I have no motive. I'm just randomly rolling the dice left to right, left to right, left to right, versus, I really want to go to the left. But in order for me to do that, I need to make sure that I have the most amount of shares that I can have. And I want to have the most control of the stock. And we've got a lot of people that are trading here in this range, so I've got a lot of work ahead of me to shake out all these people that are trading this range that are going to basically sell off, aka weak hands, right? That aren't going to be helpful when I mark this up. Everybody that sells on the way up works against the operator who's trying to mark it up. Everybody who buys on the way down works against the operator who's trying to sell. So they have to make sure it's worth it to them, and that they have a very good chance of making it all the way to their intended price targets. There is no macro uptrend on AMC. In terms of like the biggest possible picture, there is none. Hot take. There used to be, but it's gone. It used to be right here at $40. Your market maker isn't supposed to, whether or not you agree with this or not, the market maker isn't supposed to control the price. Options generally do because of option sellers, and that's part of the reason why they'll pin stuff. They spend a lot of money to make sure that they can make money. But ultimately, like, your your market maker is not supposed to do anything. If you think about the nature of the payout, yeah, it benefits them to have it at max pain, but at the same time, it's really the option sellers that are causing that price action to move. And what they're doing is some ways they're kind of manipulating the market maker into hedging or de-hedging, right? Market maker only has to buy or sell in order to provide the shares or the sells or whatever it is. So they have to be prepared to make good on those options trades. That's it. That's the only reason they're supposed to be affecting. That's the only way they're supposed to be affecting the market. Okay. So when people say MMs control the stock, they're not 100% wrong, but they're not 100% right either, because that makes it sound like they're the operator. And there's a lot of interesting conversations we can have about that, but I don't think they're the operator. That's a different person. The operator is somebody who's buying and selling shares for the purpose of making their own profit, not so they can provide shares when somebody executes an options contract. That's not even remotely the same thing. There's no breakdown here. And it's not all of a sudden. This has been set up for a long time. Again, I'm not trying to be like a jerk. I guess I don't really fully understand where that mentality is coming from. What happened all of a sudden that surprised anybody? Like dropping through 450? Because we talked about this like 2 weeks ago, starting off about how when it came down, there was only a few levels, and 460 to 425 was a range of levels that it could potentially hit. There's really no reason to look back at that and say that it was all of a sudden then, you know? And when you look at the grand scheme of things, like, there's only one of two things. You have a breakdown or you have a spring. So is it all of a sudden? I don't think so. I think it's been a long time coming. We've been driving around in this range for months and months and months. You don't just trade to trade sideways. You don't do that. You trade in order to finish trading a liquidity zone and then you move on. You know, it's that simple. So I don't agree with this idea that it's like all of a sudden. I'm not trying to be overly technical about it. I just don't think that's the right way to look at it. So I don't agree with that. So yeah, you look at this as a macro. There's no macro uptrend. This would be thought of as like a more or less like a downtrend because it's made consistent lower lows. The only higher high it made was right here, and that was the big picture move. Had that held, this had never made a lower low than 2020, so it made a higher high. It looks like a change of direction possible. And I think it's a possibility that they changed direction based on ape. This could have been an uptrend. I don't think that's an out of the realm of possibility question. And I think that Judge Zern type decision or whatever it was, for whatever reason, and they may have already known that was probably going to come. But we know that Vanguard sold 60 million shares here when they dropped the stock. So it's not, in my opinion, it's kind of like, yeah, they've been the primary operator who's kind of driven this thing down for the most part. So why do I trust them to drive the stock back up? I don't trust them. But I think I think that's like the point, right? It's like, I don't trust them, but I'm also kind of the opinion that you have to just kind of look at what you're being given and take it from there. I don't think that there's a strong chance, I've already talked about this, that this is actually like a macro uptrend. But when you look at the waveform, it's pretty clear this waveform could easily build out back to the previous center. And I go through this quite a bit on this channel, so Yeah, I'll do it in a second. But I've been through this quite a bit. I think that a large part of this is to maybe potentially get back up to $72 again. It would look a lot like the original all-time high, kind of a rinse repeat. I don't think that necessarily happens right now. It looks like, whoa, it's going to happen right now. No, not really, because the waveform out here is ridiculously long, long-winded. So personally, I see this happening in like February of 2026. We've kind of already talked about this. Even in a conservative breakdown of this wave, or even in like a liberal blah, 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 you would look at this as like a breakdown. And we could do this again over and over and over today if we really wanted to, but you basically be looking at this as like an overall move to come down here, and you'd be looking at this as kind of like the whip around and so on and so forth, and you basically have a potential that you're going to react back to the upside. There really wouldn't be a lot of expectation that that should happen any faster than the wave kind of originally moved, right? So there's a number of kind of possibilities here. I've always favored the longer term one, so that's the one that I use. Others are going to favor shorter term, where it's like basically right up to the top, right back up to the top, so on and so forth. Okay? I don't really want to go too deep into that right this second. That's about all I can give you on the big picture, because I think it's a massive whip around wave. And then we can go back and look at what that might mean, big picture, so on and so forth. And there's a number of ways, again, to kind of illustrate this and yada, 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 so on and so forth. So some folks were looking at it like, hey, I think it's going to happen. We're going to break out here and hold a support, and then we're going to go all the way up to like $70 right now. And most of those folks were also saying it was going to be a moonshot anyways. And then other people like myself, and I don't know if there's anyone else who's been talking about it like that, but talk about more like this kind of a bottom happening, where you're going to build out here and then break back up later, so on and so forth. But the big picture analysis to me would be this wave here. Okay? So I think the purpose of all this is probably to get us back to like near 74, and then potentially a little bit higher if we come up a little later. I genuinely think that's probably the goal. So on the big picture, like, this doesn't really look like anything particularly interesting right now to me. It just looks like we're retesting that floor. I could see us breaking it and holding it. I could also see us pushing up to 13 or 14, then dropping down, because like we were looking at on the small scale, we have a series of creeks that we haven't jumped over yet. And there's more than one, and they're specifically like built out in a very kind of narrow, overarching way. I want to say that this one here, where you've got like a series of creeks that haven't been met yet, and we're continuously kind of working through those as we go along. And it'd be hard for me to see us just kind of jumping them all at once, but if we did, I guess it would have to be right here in the middle, kind of like what we did in January. It's not impossible. We've talked about the nature of that. Some people have said they think it's going to right to 20 and then maybe come back down to like 11. And I don't think those things are out of the realm of possibility. But again, much like what we saw on the micro recently, it's like, yeah, but there's also this kind of series of creeks that we keep forming that haven't yet been breached. Like, this is a one right now that's pretty obvious because it's kind of right where we are. And big picture analysis would say that this is I'll get to WTO in just a second. But big picture analysis would say, yeah, I mean, you can't go anywhere unless you jump that creek. And then you're going to be looking at the next ones up. You know, we've talked about these repeatedly and like why I think they're important and what I think they are and so on and so forth, you know. And what I'm seeing right now is that there seems to be a large amount of them around the 13 to 14 level. And that makes sense to me because this area all the way up to about $14, between 14 and like, let's just say 1080, I think is what it was, something like that, is basically like the supply and demand zone from back here. So it would make a lot of sense to me, a very red chart, but it would make a lot of sense to me for that to be a rejection, possible rejection area, and for us to form any kind of a new top here, pushing out into maybe the end of the year. I think you could see it happen, but it'd have to be like in a situation where you're breaking above 14, and I don't necessarily see that happening. So there's been a lot of talk about 20 plus dollars. No one, Booksy is not against $20 plus. Okay, you have to understand, like, I trade this like I trade anything else. I'm trying to be as simple as possible with my understanding of like where it goes, but I also don't want to assume it's going to do something that I'm not really 100% about when previously it's not done that. I mean, this is an example of a very similar kind of hook bottom where it dropped off. It came back up and retested the high of that range. It backed up, went sideways for a while, it pushes up higher, and then it ends up coming all the way back down to make a new low. And it's doing that, checking these liquidity levels, you know, before it breaks out. And I can't help but imagine that this is very similar. Again, part of it because I think that this big creek jump that we make, if we don't test it, I could see it easily coming all the way back. Back down to check it later, you know? And it's sort of like we were talking about on the micro this morning. It's like, I think there's an assumption that we'll never go back below XYZ again, but that gap may be met. It just may be met later on. And that's actually what happened here as well. There's a gap from back in the early part of April of 2020 that gets met, and then it breaks above that gap, pushes back up, and then drops again. So I just have in my mind that this is a possibility, you know, and this is kind of similar in terms of like a waveform as well. If you look at the U shape, it's actually really similar wave analysis as well. There's a similar kind of motion, albeit this is very slow at first and it accelerates later, but there's a similar motion here where it kind of looks like it's catching on it. It advances from it again, and then it dunks beneath it. This is that 50-50 I've talked about frequently, and it 50-50 is around the wave here, not from here. You know what I mean? So when I look at this, I can't help but kind of be of the same mindset. You know, it's just the nature of it. I can't unsee it. And I don't really mean to be like a broken record either. I'm just telling you what I'm visually seeing as the competition of wave analysis up to down. This to me looks perfectly reasonable. Like to come down back to 3 later and fill that gap and then drive low by summer after making a big move going into the end of the year or whatever, all of that is perfectly reasonable to me. And someone else is going to look at this and say, no way, Jose, it's just going to break up. And I'm like, all right, well, we'll see, you know. This is what would have to happen in order for this to advance like quickly. Not against it. I know it ran really far on the wave, but that it didn't really run from the wave. It ran from... do you see how like this advancement happened and it goes back to retest this level first? This is the argument that I think is the anti-argument maybe to what some folks are saying. And then other people are looking at this as if this is the January move. That's what originally everyone was saying. And I'm like, well, if that's a January move, why would you expect the next move to be significantly higher? The January move, even if you thought that was the case, is like a 50-50 from the breakout point. Like, you wouldn't be able to look at this the same way if you really thought that was the case, because it would be like, oh, this is only going to go to like basically the same spot. Like, I don't know, it would have to be right here. It'd break out of that creek right here. So it would basically only go to like $12. Like, it's a really bizarre to me that folks are like back and forth on this. Like, oh, it's January. And I'm like, yeah, but then you're basically arguing that this is iterative. And if that's the case and it's an iteration, then would you not expect this to kind of come back up, make a second high, and then basically drop off the face of the earth? Like, or is that just not convenient for your TA, So I find this to be a bit obnoxious. I don't know. There's a great deal of inconsistency with fractal analysis that people have. They try to like justify things by saying it's this or that. A shrinking iteration is a shrinking iteration. If AMC continues to iterate the way that it continues to iterate, I don't think it makes any sense for this to push up necessarily back to the highs. The only way I can see that is if you treat this as if it is the same kind of bottom, but that it's going to do an LPS instead, which would be, again, maybe this only comes back down to fill the gap, and then it just kind of reacts and goes back up. That's possible here, and we've talked about this. And someone is going to come back later and it's going to say that I never talked about it because that's the way it is, or ignore that I talked about it. But we've talked about this like multiple times. It doesn't have to be a spring here, but that would be a big change of character. But this did not immediately just like hit the low in March and then just like take off. It did not, and that's all there is to it. It didn't have some like immediate move into this SOS and then take off. It just didn't do that. So behavior-wise, it went up and checked where it dropped from. Then it checked it again and made a higher high, and then it dropped down low for a spring for liquidity, and that's ultimately like a huge, I mean, it's a humongous auto reaction, phase B top, phase B bottom spring. We don't have any of that right here. All we have is what I think is like a gigantic auto reaction. And I think another part of the reason why maybe we're expecting bigger things, and maybe we're right to expect it, I don't know. But maybe another part is just the volume being so massive that there's an expectation it can't possibly be like this gigantic range. And I'm of the opinion that I don't think that's necessarily the case. I could see an operator taking this a long route if they so choose, taking it a long way around. So yeah, so no real macro uptrend to speak of. We haven't even broken out of our main creeks yet here from these downtrends. There's no breakouts, and that's the incredible thing. Maybe the last breakout we had was this really steep one right here, but that's already happened. That was, again, May. There are no breakouts. Like, I don't know. I want there to be, but it's just not there. So for someone to, I don't know, I'm not picking on you, fidget spinner, but to come in and say that this has been like, this is out of nowhere doesn't really make any sense to me. And I know we're kind of talking about the same thing here, but it is what it is. Like, you get these parabolic downtrends like this, usually going into like a terminal moment where there's a high selling climax, and that's kind of what we got here. Locally, it's not the biggest selling climax we ever had, but it's a big selling climax here. And then you break out, and if you can manage to go across these creeks, you're basically out of, I don't say out of the woods, but you're basically out of this range, potentially with the same kind of breakout. The micro, in this case, looks similar to the macro, but it's just the way the AMC breaks out. You can go to like March 2022 and you see the exact same thing. Almost the exact same thing happening. So maybe, but we don't know for a fact it's going to stay there. Like during the last run up, we had a huge wick above that didn't even present itself on the main chart. You had to look at after hours price action. Disguising things, right? And if the operator's aim is to distribute at 15, you're not necessarily going to have a bunch of shorts running for the door if they're not really there. So, yeah, WTO, Jason, I made a point that it had a head and shoulder. I talked about this a little in our Discord group. And the head and shoulder breakdown would be a breakdown beneath 48 cents. It did break that, and then it dropped. It only went about 50% of the way, though. So it went to 46, not to 43. And then it reversed. Just so happens I drew this morning that you could have a potential reversal that holds, in which case it's kind of like just a dip. It's almost like a, I don't really like the way this looks, but maybe a good way to put it would be like a, sort of like an, either this is like an auto reaction or this is an auto reaction, right? One or the other. You may see it try again. It has broken some creeks again. Now there's more. You know, it's like, this kind of just goes on and on and on. I'm not a really big fan of the breakdown at 58 cents. I vocalized that at the time, and I wasn't a fan of the breakdown at 48 cents. If it's going to continue and not be weak, not show weakness here, it needs to cross up right now and then seriously advance. And I'm a little skeptical that it even goes far beyond 60 cents at this point. So we're going to have to kind of wait and see. It's just struggling to turn. That's what I'm trying to say. I have no doubt that if it managed to make this turn, WTO probably has a pretty strong advancement back to $1.30 way up here. I genuinely think that's possible. But right now, it's not following the arc, and there's no other arc. So it's basically delayed away from it. You have a chance that tomorrow, which is Friday, this is the last pivot target we have. And that's the last place that I think you could have a major pop. It happened on the last two pivot targets. I deleted the first two over here. But they were also there, you know, where they were big green bar kind of pivots. This is the last one I've got on this first setup. That's it. So if it can't manage to use that to its advantage to rally, I don't think that the wave is necessarily going to complete strong. It kind of presents itself more as a distributive kind of walk down here. And yeah, that could still present itself strong later, but it kind of ignored the initial setup. Does that make sense? So I'm not willing to continually like compromise the chart in order to make it fit. You know, I want there to be consistency in the chart. So if I kept doing that, probably could make a way to finagle it so that it looks right. Maybe this is 50%, blah, 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 blah. But then it really just wrong, you know? Like at that point, I just got it wrong. You know, we had those early estimates were pretty tight. I think we had some good estimates early on when we were looking at that walk down. Now at this point, you can clearly see it's like curving outward. If it does not find a support and pop, you know, with a good drop and then a big explosive move up, to me, it just looks like it's flatlining, and I really wouldn't know what to make of that. You might still get a big reactive move to $1 or something, but it's not exactly a super positive chart in that case, because if it does that, it could be very distributive in nature. Yeah. So I'm just being honest. It is what it is. You know, if this is a good move, it should react. I think it could get up to 130s to 140s, even maybe almost $2 potentially by next week. But if it doesn't react on Friday in a really strong manner, stronger than last Friday, right, which had a big reaction but then didn't follow through, and you're kind of out of luck here. I think it's just showing a lot of weakness. The cat ears don't always break out, you know. Sometimes they break out and then they go down and sideways. Sometimes they break out and they go right back up. And that's what we were wanting to see. We want to see that cross up right here, and it didn't happen. Instead, it went back down. So it is what it is. I'm not saying it's all bad. I just think that from here it needs to really show some strength at 50 cents. If it just head fakes up and then drops back through 50 cents, especially it comes back down through 48 again, I don't really want to mess with that right now. I would probably be inclined to like think it not good. It needs to kind of hold again 50 cents. There's a potential here for like a slingshot, but it needs to kind of go. And yeah, I genuinely think if it does slingshot here and it goes, it's probably going to be pretty darn explosive. Maybe to a point where people will be very surprised, even like amazed that it's as bullish as it is once it finally goes, because of the divergences that it has, right? You can see it on this RSI on the 4 hour. Like, it's been pretty strongly divergent ever since the 18th. And that may not mean a whole lot given that it kind of erased some of those other divergences in different time frames. But when I go back and I look at the comparisons that we made, a lot of this is very similar to those comparisons that we made on, I think it was AILE. So it's still like really similar. It may not feel as positive now for various reasons. Where did the MACD go? But it is very similar still. The issue is that where it could have turned up, it didn't, right? So you have to kind of just take it for what it is. Okay? You know? Like this right here is what I'm talking about. This kind of 4 hour, like it shifts, goes from really high red selling to like shifting green on the MACD on the 4 hour. This is basically exactly what happened on AILE with the upturn of the RSI right before it took off. But this is where it ultimately has deviated, was like right here when this happened and it jumped the creek, and then it also jumped the RSI. On AILE, there was no sort of sideways downward action after that for like a week. It just kind of pushed up above and then it held, and it was really strong, and it just pushed off. I think that's where we got that breakdown at 58 cents. And then when you go to like smaller time frames, things change quite a bit. Like the 2 hour, for example, it does look like it's trying to like regain the floor here for sure. Again, divergent quite a bit. But if you go to the MACD, it's kind of like flattened out. Like it doesn't quite want to jump yet. It keeps getting like really, really close. And I got to, I think when it gets down to like 30 minutes, it actually has crossed up already and then like broken back down. And then like the hourly, it was like right here, like it was going to try to flip. I don't know. And it kind of did. So it's like retesting the flip on the MACD, which is unfortunate. I want to say it's 30 minute was the one that I'd already crossed up. Yeah, see, it crossed up right here. So again, AILE, I'm not trying to make too much of a direct comparison, but just as a technical pattern goes, once this crosses up, you would expect there to be a pullback maybe, but you would want it to hold, and it didn't happen. And so note that the breakdown at 58 cents, which is that support level, also coincides with the cross down on the MACD indicator of the two averages moving. So it's now in a position where it kind of like clearly dipped low, and now it's going to have to like rebound. And it's hard to look at this and not think this could still be like distribution, like two tops pushing up, where it's like distributing. It's hard, right? So it has a lot to prove. I think maybe the big picture on this is debatable because the big picture analysis, nothing's crossed up yet on like MACD, for example, and somewhat on RSI. It's kind of like trying to, but not quite there yet. So that's how I feel about it right now. Really just trying to pay more attention to like the bigger time frame. This 4 hours looking kind of spicy. It's got an incredible amount of room if it wants to run here. I mean, just an insane amount of space. It's sitting at like at 24, right? And we could be talking about going all the way back up to 70. So huge potential. But if a stock is dying and it's on life support, I don't think a lot of that stuff ultimately matters. It's hard to say. This is a big high risk play. We've already said as much, right? So, all right, guys, I think I'm done. I think viewership just dropped off a cliff. I started talking about other things again. People are like, I don't want to hear that. Something about Adam Aaron as a keynote speaker. I don't know. I don't think it really matters that much. I think we've already done all the analysis we need to do today. I feel like we did a good job. And I still got an animation project I got to finish, so I'm going to take a stretch break, eat lunch, walk around a bit, and then get to it, I think. I'll be on the Discord here and there today. Keep it positive. Keep it about curiosity, not, consistently like being judgmental and negative. Lots can happen. But in terms of AMC, just very, very briefly, again, we've talked about this. This was not out of the realm of possibility. It's here now. Let's watch it go and see how it goes. I do think there's a possibility we're stuck down here for about a week. It's just taken a long time, and that's the way it built out. It's these initial pushes that make that the reason. So there's a reason that I'm saying that. It's because these initial pushes are kind of slow. If this had been a lot faster, I think we've been talking about it being more compressed. So it is what it is. Take it in stride. Appreciate y'all. Last thing real quick. So those of you that are members, I know some of you were gifted memberships and somebody like dumped their membership like right away. Look, I don't have any problem with that. If you guys are like, I don't really want to pay for a membership, that's fine with me. Membership is completely optional here. The reason I'm doing it is because I'm trying to basically create like a sponsorship program for people that can't afford to do martial arts, mostly kids, I guess, whose parents maybe can't afford it. And so all that money is going towards that. And I got some really good news about that. Two things. Number one is apparently I signed up for some kind of a bonus program on YouTube when I started the membership thing. And it may be a very sizable sum of money. I'm not seeing it anywhere in my account, and I'm seeing like mixed signals from people. Some people got their payout and some people didn't. But if that happens, we're going to be able to sponsor people for a while, which is awesome. We'll be able to do at least like 10 months or so, which is kind of crazy, of sponsorships. But I kind of reached like a first milestone, and we're able to sponsor. We'll see if they accept, because I don't know. It's a mother who's like a single mom who just graduated from school and does not have the money to continue because she's trying to get a job, and she doesn't have the money to continue with her kid at Taekwondo. So she's like bailing, and the instructor already kind of tried to work with her on it to like say, hey, there's some things you can do to maybe lower the cost. But I don't know if she's maybe a little proud or embarrassed or something, or if it really is about money. She may not really want it. If it's more about like the time commitment, then the parent could still be like, no. So we're trying to navigate that, but basically I offered to go ahead and sponsor the kid anonymously, of course, for 3 months. So if it works out, It'll be month to month in terms of payment, but I worked a deal with the owner to sponsor somebody for 3 months. So the initial payout for this membership program probably won't come for a little while, but it's not like enough. Like I think it's like $25 a month or something right now that members are helping with. But if this bonus thing comes through, it's definitely going to work out, and I hope it's true. I don't know why Google would do that, like send an official email about it and sign me up for this program and junk, and it not be true. But yeah, we're basically going to start our first sponsorship if she says yes. So I thought it was a really good time to just try it. And whatever's not there through the memberships or through my art stuff or whatever, and I made some money on some commissions, and that's another reason it's not just this. I'll just pay it out of pocket for now. No, I'm not going to do that. I'm not doing that. But it's the parents' responsibility, for their kids. But in terms of like the payment, it allows for them to do something while they're in transition, for example, maybe between jobs, and it's a set amount of time. So, but I just don't know the personal situation. So if the mom is like, hey, we can't do this, and it's really not quite about finances. I mean, maybe that's part of it. Maybe part of it's like the time commitment. She may say no. She may be like, nah, I still don't think we were going to do it. I can't control that. But I think that's fine if that's the case. And we're also not really sure what criteria, because like someone could lie and say they can't afford something. I don't know why you would do that. But like if legitimately they were like, I don't know why you would do that, but it's hard to, I don't want to be asking for people's personal finances, but we'll eventually have to have a way of vetting people more officially. I just want to get something started. So I just wanted to encourage y'all that did join. And I know there's not that many, but even if you got gifted and you decided not to continue, that's fine. But this month, that gifting is going towards that, so it's a good thing. Yeah, so at least for this month, that's what you guys can hopefully look forward to. And I'll have more information as we go, but I just wanted to shout out that that's what's happening. So it's moving forward slowly. But that's the best way to do things, is to do it slow and do it right. Still working on the legal side of it. Really want to get that worked out before too long, but it's a lot of little things that I got to put together. So anyways, appreciate you guys, and I'll try to catch you tomorrow. Bye-bye.